last few weeks, and that really set a new low price point that is very likely to see consumers react. Would you say that's an inflection point where more consumers are going to try and leverage what happened in terms of getting a better deal for themselves?
I think that's an excellent question, Youssef, because I think you are tackling one of the key advantage points that gas players in this region, I would say oil and gas players in general in this region can play with. Because if you look at some of the key success factors that these players are having, they have relatively high capital efficiency with some of the best return on average capital employed compared to the IOCs and the independents. They have relatively optimized supply chain. They have access to the lowest carbon assets, oil and gas in the world from that perspective. So the last, I would say, point on which they can have a level playing field with other players in the world is the issue of marketing and basically downstream market development. That's definitely a key point, especially when it comes to gas, because it's less liquid than the oil market indeed. So I think I would not probably call it an inflection point. I would call it a transformational point, because this is a time where cost curve will start to mean something. And when you have, I would say, the low cost, low carbon producers positioning themselves in increasing their market share. So how will the buyers react to that over the next 2 or 3 years? I think we still, especially when it comes to the gas market, where I think the recovery will be a bit longer than in the oil market. So you will need at least 2 or 3 years for the buyers and sellers to position themselves.
I want to pick up on an important point, and that is the committed investments. You look at the top 3. I'm looking at the table here, and Saudi Arabia is in that triangle over the next 5 years. But the question becomes, when will they produce enough to be able to start exporting?
I think the key question is how you monetize the gas, whether you export it or you consume it domestically. At the end of the day, a player should get where it has the most monetization for the fuel that it's producing. So if global gas prices are depressed and the netback gas pricing to Saudi Arabia, if I take that example, or Egypt or Algeria, is low, it might actually make more sense to consume it domestically if domestic gas prices are high enough. So at the end of the day, it's really a balance between the domestic monetization of the gas, whether you invest in enough industries basically to diversify also your economy away from oil and gas, or you pursue an export-oriented strategy, but in that case, you are competing and you are competing against low-cost players that are investing massively in the next cycle and capturing, as I mentioned already, downstream markets in Asia, in Africa, in opening new markets. So I think the marketing race in LNG is going to become fiercer over the next 2-3 years, and I think for a player like Saudi Arabia or others, they have made progress in trying to become a portfolio player, but there is definitely a strategic question to be answered.
Up next, a vaccine blow as Johnson & Johnson temporarily halts its study. The details on why next. This is Bloomberg.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Welcome back to the Best of Daybreak Middle East. Markets took a hit on Tuesday morning after bad news on the vaccine front and a pickup in infection rates around the world. Johnson & Johnson temporarily halted its vaccine study, and that came after a clinical trial participant experienced an unexplained illness. Second time that's happened to a front-runner developer. In the meantime, you had developments in the UK. Boris Johnson closed bars and pubs in the worst-hit areas to control the resurgence, although his top health advisor says it won't be enough. We got more on the implications for markets with Kirk West. He is from Principal Global Investors. Take a listen.
We are more glass half full than that. I mean, there's no doubt that the health pandemic remains center stage. And, advances on the medicinal side, be it therapeutics and vaccine, are key to that. But Johnson & Johnson are just one of many trials at the moment. And so we are still of the view that come mid next year, there will be a vaccine being rolled out, and that will be accompanied by continued economic recovery, and that will be supportive of risk assets. So disappointing news, but I think a developing story, and we would still be on the positive side.
I mean, you might still be on the positive side, but the fact of the matter is that every time there's a setback like this, it shakes the confidence in vaccines more broadly. And it's at a time where there's already a lot of skepticism from people all around the world about whether fast-tracking some of these experiments is even going to yield anything that's safe.
Well, we actually do feel confident that a vaccine will be developed. Again, there's many, many trials in an advanced stage. I would actually argue that probably one of the greater challenges will not be the existence of a vaccine and the ability to distribute it. It will be ensuring that enough people are prepared to take it. And that is a challenge we're yet to confront. And that's going to require, global government coordination in terms of being supportive of such a rollout.
Kirk, let me run this by you then. The Markets Live team is asking the question right this minute. Are investors too complacent about the impact of the pandemic on economies?
I would say this year has just been another stark lesson for investors that it's time in the market versus time in the market. We had obviously the big downdraft back in March, and anyone who's looked to get out of the market after that period has been hurt. And I think that will certainly be the case going forward. And I'm talking risk assets and I'm talking equities, because we are seeing the signs of a self-sustaining economic recovery. Financial conditions have never been so accommodative, and we are seeing global fiscal stimulus. And you couple that with where you see earnings revisions going into 2021, again, I would say that our market's likely to have their noisy days, yes, but would I rather be in equities on a 3 to 5 year view? Absolutely.
So let's look at this latest data from China. I mean, you look at exports rising for the 4th straight month in September, imports surging, and that would perhaps tie in with the argument that you see the global economy and China in much better stead. Are there some specific trades that you can build on based on the numbers that you're seeing at the moment?
We would suggest those numbers do support that the economic recovery in China is self-sustaining, and it certainly is a market that we have favoured. When we look at our asset allocation, we are overweight equities, and within that overweight, we are overweight emerging markets, and within emerging markets, it's North Asia, and China would be the largest part of that. So China is a market which has performed well for us this year, and we think it still has legs. That said, I don't think any of us would be surprised to see the indices somewhat range trade for the next few months. But within that, I think there are some real alpha opportunities. And certainly in the new economy would be the area that we think there will be those opportunities.
Up next, Apple unveils its latest range of 5G-ready iPhones. Can it spark a new cycle of sales growth for the world's largest tech company? Find out next. This is Bloomberg.
sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Welcome back to the best of Daybreak Middle East. Apple this week unveiled its new iPhones, promising they'll be thinner, they'll be lighter, and they'll be faster with long-awaited 5G technology. It hopes the launch of the iPhone 12 will spur a new era of sales growth.
Each generation of cellular network technology on iPhone has enabled breakthrough innovations and entirely new opportunities for our developers and our users. And 5G is the most exciting step yet. For so many people, this all becomes real with 5G coming to iPhone.
We got more with our Asia Tech editor, Vlad Savov.
Well, as you mentioned, and as Tim Cook says, 5G is a headline feature, but Apple hasn't neglected the real day-to-day essentials for making a better device. What part of this announcement is that the company says it's the biggest leap in durability between iPhone generations. Also, in terms of design, it's kind of gone back to the flatter, more angular design of like the iPhone 5, iPhone 4 generation that's been super popular. And actually, the thing that Apple announces last at its iPhone event is always the thing that people are most sensitive to, which is the price. So it now has a $699 iPhone. It's made the entire family more affordable. It has its smallest and its biggest flagship iPhones with the new iPhone mini and the iPhone Pro Max. So it's really expanding its reach. It's expanding the options for people. And among other things, it made a big leap with the iPhone 11, 11 Pro cameras last year, and it's doing it again this year with new additions, new even RAW formats for true pro photographers, and it's upped its game even with video cameras where the iPhone always had the lead among smartphones. So lots of upgrades actually behind the scenes, behind the 5G headline.
I want to get into the 5G wireless technology. I mean, it was very impressive when presented on stage, and you know, a few other key people shared their input on that as well. But how transformative is it going to be realistically, given that there's the network's still being upgraded, and it's a lot of work that needs to be done?
That's absolutely correct. One of the best ways to look at it is the lead between 3G and 4G really opened up a lot of functionality immediately. The moment you got your first 4G device, you could stream things like Netflix, you could stream higher quality video. The consumer benefit was immediately obvious. The difference between 4G and 5G for consumers, even where you do have coverage, isn't going to be that sort of tangible. You first need to have the networks available everywhere, which isn't the case. It won't be for months, maybe even a year or two. And once you do, then companies need to build functionality that really captures that extra bandwidth, that lower latency, things like game streaming, etc. But the most immediate impact might in fact be Apple, with its massive influence and with the iPhone driving the industry, helping networks with their 5G marketing. And you know, extra investment, extra spending in terms of advertising. One thing that networks have done, especially in the US, is kind of kept quiet before the 5G iPhone came out. And what everybody seems to anticipate now is for them to do a marketing blitz just before the holiday season, remind everybody 5G is here. Our networks are growing, not fast enough for consumers, but they're growing. So it's, if anything, compared to all of the day-to-day upgrades that I mentioned, which are kind of a long list of features, 5G is just an easy thing to market. So that's going to help those guys, the carriers and the distributors.
Remember, you can catch Daybreak Middle East every Sunday to Thursday morning or right here on Bloomberg Television. That's at 8 a.m. Dubai time. Do join us then. This is Bloomberg.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume. No matter what, we keep on, so you can keep on.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Founded more than a century ago from humble origins, L'Oréal is now the world's biggest beauty products company. Specializing in cosmetics, hair, and skincare, it boasts an international portfolio of 34 brands and has a market cap of more than 105 billion euros. At the helm, a man who's dedicated his entire career to the company. Over 4 decades, he's covered all facets of the business. Today, on Leaders with Lacqua, we meet Jean-Paul Agon, Chairman and CEO of L'Oréal.
Monsieur Agon, thank you so much for speaking to Bloomberg.
Pleasure.
What happened to L'Oréal in the last 10 years? Innovation, your share price has grown. Was it exciting times?
Yeah, very exciting. I started as a CEO 10 years ago. It has been 10 years very exciting. Of course, we had a crisis in 2008 and 9. But globally, the business has been very good. We have been growing, acquiring brands, launching new products, gaining market shares everywhere in Europe, USA, China. No, very exciting, fantastic.
What's been the most fun?
In fact, the most fun has been the past 3-4 years, because thanks to the digital revolution, everything has been transformed. And as I tell my teams, I think that this industry, our business, our company has more changed in the past 3 years than in the previous 30 years. So it's an amazing time, extremely exciting.
So is this the way you sell, or is it the way that people actually look at makeup?
No, in fact, it's the relationship between brands and consumers. In fact, the digital has completely transformed the relationship between the two. Before that, brands were talking to consumers, pushing towards them information or whatever. But now the consumer has taken the power. The consumer decides how he wants to see the brands, what he wants to know, what he wants to discover them. Digital, in fact, creates a relationship that has nothing to do with what existed before.
But isn't it much more difficult, therefore, to control your brand?
Yeah, but at the same time, it's more exciting, and it enriches the relationship. So now, thanks to digital, we can communicate the content of our brands. We can do tutorials to explain how the products work, how they should be used. We can have a personalized relationship with consumers. So it's a completely new dimension. It's much more rich and exciting.
So what sells at the moment? Is it the luxury brands or is it the more consumer brands?
This year, luxury. This year, luxury has been booming everywhere, mostly with Chinese consumers. Chinese consumers are fantastic. They love beauty, they love luxury, they love our brands, and our business with Chinese consumers everywhere has been booming.
L'Oréal's global reach stretches across 140 countries. About 2/3 of its sales are generated outside of Europe. Much attention has shifted to China, where strong demand for high-end lipstick and perfume is driving growth. In 2015, China surpassed France to become the group's second biggest market behind the United States. Some of the success is being attributed to selfies, with camera-conscious millennials buying more makeup than ever before to look good instantly.
Have you had to adapt to the Chinese market?
Yeah, in fact, the products we sell, not for all brands, because the luxury brands, for example, are the same all over the world, of course, but for our mass brands like L'Oréal, like Maybelline, the product that we sell in China are formulated in China by Chinese, in our Chinese labs.
Because of regulation?
Not only, but also because we want to create the products that are absolutely right for them, especially skincare, because their needs, their skin, their aspirations are specific, are different. So we formulate in our Chinese labs, we manufacture in our Chinese factories, and L'Oréal now is L'Oréal Paris is the #1 beauty brand in China.
I've also been reading that one of the most popular products is actually a homemade, I guess, range of cosmetics wear, which is favored by the wife of the president, President Xi.
Yeah, it's a great brand, but still the #1 beauty brand in China, the preferred beauty brand by Chinese women is L'Oréal. L'Oréal Paris, they call it with the Chinese name, it's Pali Olaya, which is beautiful, by the way. And it's great because, the L'Oréal Paris is the number one beauty brand for Chinese, for Americans, for Europeans, for Russians, everywhere. So it's a
not
great
bad.
Satisfaction. Yeah,
so,
not bad.
So tell me about your success in China. Is it through distribution? Is it through ads? Is it through celebrities? What's the attraction for your brand by the Chinese?
The reason of success of our brands everywhere is always the same. It's #1 quality. We for all our brands, our absolute priority is the quality and safety of our products, and it's something that the Chinese respect a lot. It's very important for them. #1, innovation. Innovation is extremely important. It's an industry where you have to innovate a lot. More than 15% of our products every year are new in order to keep innovation flowing very strongly. Of course, it's the imagery of the brands. Brands like Yves Saint Laurent, Lancôme, Giorgio Armani, L'Oréal Paris. It's a beautiful imagery, and Chinese consumers are very sensitive to that. They like it.
Is the U.S. tough? A tough market?
The U.S. this year is a bit tougher, a bit softer, let's say. It's not really tough, but it's a bit softer. Certainly softer than China. But it depends. Last year the U.S. was very good. So every year, it's funny because every year the market, roughly, globally, is more or less growing at 4%. But it's never made exactly the same way.
But so how difficult is it to predict what, what will work and what won't? Why am I using this mascara, not the other mascara? Why am I using this foundation, not the other?
Again, it's very, when you know well your consumers, when you understand their desires, when you can guess their dreams or expectations, then you can really create what they will love.
What will the next 4 years bring? Is there a specific market that you think will grow more? Is it, for example, men's cosmetics or something else?
Digital, I think, will be the most important element of transformation of the market. So definitely we're going to see the e-commerce growing. For example, e-commerce in China is already more than 30% of our sales for our mass market brands. So it's huge. So we're going to see digital growing. We're going to see probably new channels also emerging, like specialty stores, our own stores. We are very big in also growing segment is the travel retail, the stores in the airports, because more and more people are traveling. So I think there will be new channels. In terms of regions, of course, the emerging markets are still growing, and our categories are growing too. Makeup has been booming for 2 or 3 years. I think it's going to keep booming. Skincare is growing too. So honestly, I'm very optimistic about the short-term, middle-term, and long-term perspective of this industry.
What do you think you spend most of your innovation on? Is it, for example, making a lipstick that lasts longer? Is it kind of changing it a little bit? I know you have so many products. It's unfair.
And a few secrets.
And a few secrets, but you can tell us. We're amongst friends. We were talking about what the next 4 years will bring, and it's a lot more e-commerce. How do I choose my makeup online? It must be difficult to choose the right coloring.
No, because now you have some technologies that are amazing. You know, you can test online on your cell phone, for example, simulate the application of the makeup on your face, and then you see yourself with the lips covered with the lipstick you want, the shade you need, the powder, the mascaras. You know, I did a demonstration of that to my board, you know, completely made up, and it was they were ecstatic.
Was that for the launch of the app?
Yeah.
And so they said yes.
Yeah, I wanted
fantastic.
I wanted to share with the board the fantastic progress of technology. It's amazing.
Oh, I could look like pure reds. Oh, wow.
The lipstick is moving with my mouth, and I know that I don't have any on.
It's like Amy Winehouse flips. It's brilliant. I can't stop looking at myself.
So this is amazing because you also have to then change, I guess, your research and development. How much of the overall cost goes on actual digital products?
Well, it's difficult to say because it's everywhere, in every brand, in every division. But what I can say is that now, more in terms of media, 1/3 of all the media that we do now goes on digital. In terms of e-commerce, 7% roughly of the sales that we do go on e-commerce through digital, and it's growing 30% a year. So there is a shift happening, which is extremely fast, extremely strong.
The company that invented the platinum blonde is constantly innovating and developing new products as consumer demand changes. At its lab in Paris, scientists have studied more than 7,000 types of hair and are now experimenting with 3D printing. The hope is to one day help people suffering from hair loss. L'Oréal's already created fake skin to avoid testing products on animals and invented a UV patch to monitor exposure to the sun's rays.
We have the #1 R&D facilities in the world. We are spending roughly 3.5% of our sales in research and innovation. And obviously, the most important topics are hair, skin, and hair. This is where we invent and create new formulations for hair care, hair color, all type of hair products.
You also have a patch?
Yeah.
Is that right?
UV patch.
A UV patch, so you put it on to see when you're overexposed to the sun.
Yeah, it's a creation that was made 2 years ago that we presented at the Consumer Electronics Show in Vegas last year. And it's a UV patch, you put it on your skin, and it's linked to your cell phone. And it calls you or it rings when your exposure to UV has been too high. It's a fantastic tool.
So do you think there's going to be more of a trend, which I guess is between the cosmetics and the healthcare?
Yeah, absolutely. Yeah, and also with internet, you know, this triangle between beauty, health of the skin or hair, and Internet of Things is creating new opportunities, and that are going to be very useful for consumers.
What do you like about your job the most?
I love understanding people. You know, I think that one of my strengths is the capacity of empathy with consumers. So I have this capacity to understand, to feel, to guess what consumer want, what is their desires, sometimes their dreams, and then to be able to formulate products that will respond to these dreams.
Do you believe you have to take risks to innovate, or actually, do you?
Oh yeah, of course. Yeah, because every innovation, by definition, is a bet. Every launch is a bet. It's like a new film or a new movie or new music. You never know in advance. But that's the magic of it.
So what do you think you spend most of your innovation on? Is it, for example, making a lipstick that lasts longer? Is it kind of changing it a little bit? I know you have so many products. It's unfair.
And a few secrets.
And a few secrets. But you can tell us. We're amongst friends.
No, we are working on all categories. You know, we have 3,500 researchers from many departments, and they are all working on all type of cosmetics: skincare, hair care, hair color, all sun care. And because fundamentally, as I told you, we really believe first and foremost in terms of efficacy and quality. So you know, the mission of the company, which is beauty for all, is also not only beauty for all, but the best of beauty, the best quality, the best performance, the best efficacy, the best safety, and that keeps us busy.
3,500 researchers.
Yeah.
How long does it take from, I don't know who has a concept of, for example, a new product, until that product being on the shelf for someone to buy?
Depends. Can be very quick when the formulation is easy. Can take maybe 6 months. Or when for example, a marketing guy has a vision, has a dream, but the labs don't know exactly how to formulate it, can take 2 years, 3 years. Really depends.
Mega volume on top, mega volume on bottom. Share it with your friends and buy makeup instantly.
One of the criticisms often leveled at the beauty industry is that it's only for young people. Is there any truth in that?
No, not at all, of course not. First, that would be stupid, because we are addressing all needs for all people, and look at our ambassadors. For example, Jane Fonda, Helen Mirren, they are not millennials. So no, honestly not.
Do you sell more to millennials or to people of a more certain age?
No, we sell to everyone. It depends the brand. The brands, of course, some of our brands like NYX, Urban Decay are more targeting young people. Biotherm or L'Oréal Paris may target other categories of consumers. But no, we cover the whole scope of consumers. And in terms of age, in terms of diversity, in terms of countries, Chinese, Brazilian, Europeans, everyone. It's a beauty for all.
So how do you sell to the emerging markets?
We adapt the products that we sell, of course. We make sure that they are affordable and that people can buy them. Brazil, for example, is very interesting because Brazil is the country in the world where the hair is completely unique, because it's such a mixed country in terms of ethnic origins, that the blend is completely amazing, and that you have to create for Brazilian hair care products that are completely specific. And by the way, it's very interesting because sometimes they are the most demanding consumers, and so when you can create in Brazil a product that is good for them, then you can make it for the world, because it's going to be great for everyone.
Do you think Generation X cares more about this than millennials?
There is an urgency, clearly. We are not talking anymore about a potential threat. I mean, there is a clear and present threat.
For Jean-Paul Agon, life at L'Oréal began in sales 39 years ago. He quickly understood the power of advertising.
Read my lips. I'm worth it.
The company obviously thinks it is worth it, spending more than $8 billion a year selling and marketing its brands. A third of that on digital media.
When I was 20 years old, I was in a business school, and at the end, I knew I wanted to do marketing. And for me, beauty is the supreme art of marketing, because it's a marketing that is not only about understanding, analytics, but it's also about emotion, guessing, creation. So I think it's a fantastic marketing. There is no better marketing than beauty marketing.
And from that 20-year-old Jean-Paul Agon, what have you learned about yourself?
My God, a lot, a lot, because it was a long time ago. No, it took me, it took me many years to get where I am today. But I was always passionate. I think the incredible part of L'Oréal also is that every day is a new adventure. Every day is a passion. It's a company made of really passionate people, and every new mission is an adventure.
So what are you like as a leader, micromanaging or overview?
I like overview, and from time to time I'm tempted to do micromanagement. But when I do that, my team say, Jean-Paul, you should not bother with that. Let us do it.
Do you review, though, the end product every time, or how does it work?
As much as, I have meetings with, of course, with all the brands, not all the time, of course. I travel in many, many countries around the world, and I'm just trying to help, to make sure that we are taking the right directions, pushing in the right innovations, understanding enough the consumers we are dealing with, trying to pilot the ship.
L'Oréal's Sharing Beauty with All program, launched in 2013, was designed to transform the business. Jean-Paul Agon was determined to make the company ethically and environmentally sustainable. It's been recognized for its efforts, awarded a AAA for water management, climate, and action against deforestation.
So when did you start thinking about sustainability?
Pretty a long time ago, especially when I came back from the USA and I took over as a CEO. I really understood at the time that for a company like L'Oréal, especially because we are the leader of the beauty industry, we had to make sure that also we would do the best and the most to make the planet a beautiful place.
What started it? Is it because you say we sell so much, so we have to make sure that it doesn't go to waste? Or is it also because the consumers want something that's more sustainable? Or is it because the employees you hire want something more sustainable?
Very good points. I think it's all of that. First, because we have a moral duty. Secondly, because it's what our employees are asking for. Third, because it's what consumers want. Fourth, because it's what the society expects from a big company like us. So that's why we really went into this direction.
Does it make a difference for the consumer? I remember you telling me maybe, a couple of years ago, that if a consumer has a choice of a sustainable shampoo or a shampoo that makes our hair better, we'll always go for the shampoo that makes our hair better.
Yeah, but now what we want to do is to make a shampoo that makes the hair better and sustainable. Because now in fact, you're right. Our vision is that we have to find a way that it's not opposite, that it goes in the same direction. And it's the same for economic performance. For example, the sustainability performance should not be opposite to the economic performance. And in fact, we are able to prove that. For example, in the past 10 years, we reduced our carbon emission by 67%, when at the same time, we were able to increase our production by 30%.
How do you do that?
We work a lot. We transform all our factories. We have now 10 sites that are carbon neutral. We completely transformed the way also we engineer with water. We have what we call dry factories, that they don't use water at all. They completely recycle the totality of the water that they use. We eliminate waste. So it's a very comprehensive effort on all fronts to transform completely the way we produce, we distribute, etc.
And shareholders are behind you every step of the way for sustainability?
Yeah, absolutely. They are very, I think that our shareholders are very proud of what we do. I cannot say that they are pushing us hard to do it, but they are happy and proud.
Do you think Generation X cares more about this than millennials? The younger you are, the more you think about this?
I think that everybody now cares. You know, I think that it's very well understood that there is an urgency. Clearly, we are not talking anymore about a potential threat. I mean, there is a clear and present threat to the planet, and if we are not all doing the maximum in the very short term, it's going to be very difficult. So I think that every generation now understands that.
If I speak to you in 5 years, what will be your story?
In 5 years, probably I will tell you that the most important mission has been the transmission. Because, of course, I will not be CEO forever. And I will be, by the way, very glad to pass the baton one day to my successor.
So if you think a lot about succession, what kind of successor would you like, and what would you like your legacy to be?
I will be proud to have been able to adapt L'Oréal to the new world. I think that we are living in a very special period. The world tomorrow will be very different from the world we knew a few years ago. And you know, my absolute priority right now is to adapt, transform the company in order to make it as successful as a leader, as performant in the new world as it was in the world before. And I'm very confident about it, because that's what we are doing. You know, we are doing a cultural revolution, a digital revolution, a sustainability revolution, and so the L'Oréal will be a fantastic company. And then someone else will take the baton and will drive the adventure further.
Jean-Paul Agon, thank you so much.
Thank you very much.
What do the world's tallest building, KFC in the Middle East, and e-commerce site Noon all have in common? They're all owned by billionaire Mohammed Al-Bar. His investments like the Burj Khalifa and the Dubai Mall have become iconic landmarks, and he's diversified into hospitality, retail, and e-commerce. He was named the most influential man in Dubai and consistently ranks amongst the top 5 most powerful Arab business leaders. But it's not all business all the time. He's also a sportsman. He's an active member of Emirates' horse racing community. Today, on Leaders with Laqwa, we meet Mohammed Al-Bar, the founder and chairman of Amar Properties.
Thank you so much for joining us. You've really built a conglomerate. You've built a company that has multiple interests, multiple units, multiple portfolios. Did you diversify because you saw an opportunity or because you had to?
Well, I think all of us, we look at opportunities. We don't really have to do anything. But I think looking at the Middle East and looking at the industries that I went in with my team, I think we saw amazing opportunities in the Middle East in these sectors. And I'm glad that even though we've got difficult years, the past 2 years have been difficult years for us, still these businesses are operating well. So definitely it's based on opportunities and the sector's long-term growth potential.
Where do you see the most growth coming from? Which portfolio, which part of your business will do better than others?
The food operating well and strong in the region as a whole, especially with the food delivery business, and that's another story. I would say that our real estate business is still flying really strong. I mean, last year we grew about 28% in the region as a whole. Our e-commerce business is something that's very, very interesting. And we've got an amazing team looking at it, and that's also growing quite fast. But even with this growth, I think one have to be realistic as well. So you look at this growth and you look at what's going on in the Middle East, government policies, you look at the world economy and what changes might take place. So you have to be alert at all times.
Okay, what does that mean? Do you expect a lot of the growth, in the Middle East? If you look at e-commerce, and we'll talk a little bit more about that, do you expect it to go threefold, fivefold over the next 5 years?
Well, I would say that our real estate business should continue to grow at about 20% a year. And that's the shareholders' expectation. And it's hard work to achieve that number and keeping cost under control, margins under control, and political and macroeconomic issues in hand. So the food business, I think we should be growing 10% a year on year as well in the region. And keep in mind that, we're talking about the Middle East where, there is a need for most of industries to grow just because that I think the Middle East still has room to grow. And the other thing is that if you look at the population in the Middle East as well and the whole demographics is in our favor.
Because they're young and therefore these are, I guess, the youth will spend a lot more in 5-10 years.
Yes.
How will the economy shift?
Well, I think the economy will shift positively only because I believe Middle Eastern governments are really working harder than any other time in the past. And you see the changes that are taking place, positive changes that are taking place in Saudi Arabia. I think that's the same thing within UAE. I would look at Egypt. I'm quite interested in Egypt as well and the change that's taking place in Egypt. With all the other issues that we have in the Middle East, where I believe that I don't think it's going to get any worse than this. I think we're looking forward to a more positive trend in policy and in politics and economic growth as well.
In terms of growth, country by country, which is a country that will outperform the others in the Middle East?
The majority of our focus is Saudi Arabia, UAE, Egypt. And I would say Egypt is going faster now. Saudi Arabia, I'm quite optimistic with the changes that you see taking place within the coming 24 months. I think you'll see quite a good trend, and the Middle and the UAE as well. You've got, of course, the other Arab countries who are some slow, some moving forward, but majority of our business are in these countries.
I mean, you're holding a big investment with the PIF on e-commerce for Saudi Arabia. Will there be more, for example, on property in Saudi Arabia?
Well, the Public Investment Fund, they are with us in our e-commerce business, but they are also with us in our food business. Now, are we going to do more together? I think there's a possibility. There's a lot of work that they're doing in Saudi Arabia and outside Saudi Arabia, in the region and outside. So I would expect that maybe we should look at real estate together as well, because I think Saudi Arabia will look very interesting the coming years.
How much can it grow, property in Saudi Arabia, over the next 5 years?
Oh, Saudi Arabia, I think it's at infant stage. I think Saudi Arabia can really grow. If you talk about pure infrastructure, if you talk about retail, industrial, hospitality, residential. So you just have to make sure that you are going at the right category of residential or the right category of retail. So there's plenty of room to go that way.
When you look at how you spend your time for each of the units and also each of the countries, how do you do it? How do you keep on top of it all?
Well, I try. I still say that the real estate takes a majority of my time.
Is that 50%?
I would say the real estate takes about 40% of my time. And then the rest is a split. Noon takes a lot of my time as well. The food takes the least of my time because the team that sits on top of that business is really world-class team. And they've been in the industry. They know the industry well. Noon is a vibrant team. It's a new organization. I need to give it more time. While my real estate business, I have an A team, but I'm emotional about real estate.
Yeah, I mean, this was like the foundation of it all, right? Do you still see it as your baby?
I think my name is really linked to the real estate more than anything else, while all these other businesses, I've been with them now for about 2 years. So it's a new brand of product that's associated with me.
When you look at the various IPOs and the various units, was it to unlock value, but did you ever feel like it was also high risk?
I think mainly to unlock value, and we have investors who have put in their money with us, and it's time for them to get rewarded. But at the same time, I really like putting management under pressure, because IPO is quarterly results. You're out there in the public eyes, under pressure to perform. But mainly value creation. I think that's the business we're in.
Value creation, because what shareholders understand what you do more, and it almost focuses the mind of managers more.
Well, that is one. But many of our units, that if they're under the mother umbrella, I think value-wise, they're not fairly valued. So as we put them on the side and put them as separate entities, I think you create better value that way, and then you cash out a little bit and put management under pressure.
Are you looking at IPOing any other units or portfolios?
When you look at our business, we have businesses. We have India, we have our hospitality business, we have Turkey business, we have another business in Saudi Arabia. So the reality is that you can take all these businesses public at the right time. I think within the coming 3 years, we'll probably have India going public. We probably have hospitality as well going separately at the public route.
But so how much bigger will you be if I speak to you? And I hope to speak to you before, but if I speak to you in 5 years, how much will your holdings be worth?
I think we should be double in value, because we should be growing in value 20-25% on an annual basis. And I hope that my management and my boards really put that as a focus. And to be honest, I think we're capable of doing that. We just have to focus and have to make sure that we have the right people to do it. And we do this day and night. And that's really how we do business in our region.
But that's acquisitions or that's organic growth?
I would look at organic growth. If you talk about acquisition, which we have not done much of, I'm expecting that we do more acquisition in the coming 2 years.
Mohammed Alabar, thank you so much. Coming up next, going from bricks and mortar to clicks, we talk Mohammed Alabar's big push into e-commerce and how his company Noon could become the Amazon of the Middle East.
Mohammed Albar is not only a titan of property, he's also betting on e-commerce. His startup, Noon, launched its operations in the UAE last year. The site is described as an Arabic-first e-commerce platform and is rivaling the Amazon purchase Souk, looking to take over 15% of the growing market. One of the biggest investors in Noon is Saudi Arabia's public investment fund, which put up $500 million. But Albar is not just competing against Amazon. He's also a major player in the luxury space. He's partnered with Yux Net-a-Porter Group to offer a premium retail service to the Middle East's fashionista set.
So Mohammed Albar, do you ever feel like there's a conflict that you actually own Dubai malls, but at the same time you're trying to sell on e-commerce platforms?
The issue is that, are you relevant? That's really the big question that we have, is that I don't think it's if there's a conflict or not, but are you relevant to the space? So are we really relevant in this retail scene, or in the whole, the economy is becoming so digital. If you are not thinking about it, if you're not acting to do something about it, I think there is a risk of your business, being probably at huge danger the coming 24 months.
And so how do you stay relevant?
I think staying relevant, first of all, I have to talk to my kids all the time. And I learn from them because, I have a little girl that sells jewelry to women in Korea out of Dubai on her Instagram. I mean, what type of world is this? So therefore, I think all of our business, from real estate to retail to hospitality, I think the digital scene is changing all that. So if we talk about e-commerce specifically, or if we talk about Net-a-Porter, it is just moving your business to the digital scene. And I think the whole economy is moving that way, from healthcare to education to retail. So therefore, I think we just want to be relevant. And I don't think there's any conflict, because at the end of the day, there ought to be a collaboration or a connection between the real world and the physical world. And can we really try to find a solution and work them together and stay relevant in our business?
But so how much of your sales will actually be done on your e-commerce platform in 5-10 years? And in general, for the Middle East, are you a step behind in actually selling on e-commerce? And so is the potential much bigger than here in Europe or in the US?
Well, remember, I mean, when I look at the Middle East right now, I mean, e-commerce is between 1.5% to 2%.
Tiny.
Which is tiny compared to the rest of the world. So there is room for all of us to grow. Where will this be? I think it will go much faster than the rest of the world, and it will get into the 10-15% quite fast, again, because of the demographics of the region. So we owe it to our society, we owe it to our 300 million Middle Eastern Arabs, that there ought to be a native organization that look after this sector and participate and learn and serve.
What will Noon become? And are you nervous at any point that you're going to head with the most successful retailer of all times, Amazon?
Well, Noon, of course, it will be an ecosystem. And am I nervous? Of course I'm nervous. I'm nervous from everybody. In my real estate business, I'm nervous. In my e-commerce business, I'm nervous. In my Net-a-Porter business, nervous, because competition is severe and markets are open. Anybody can come in. The big players are going to come in. Some of them came already. More are going to come to the region. But I am from that part of the world, and I think it's our duty to participate in the scene. And remember, we as Arab businessmen, we're a bit tribal, which means that I am from this society. I have a duty that get into business and be aggressive and achieve the numbers, achieve success. But that's a duty that I feel responsible for, that competition is good for the consumer in the region, rather than one player come and controlling the life of our customers. I think it's fair to have competition and let the customer win at the end of the day.
Okay, but how do you decide? I mean, how will you go against Amazon? Do you have to convince retailers to sell on your platform instead of Amazon's platforms, or is it a price war? I mean, how do you see the kind of the fault lines?
Well, we are working with the local retailers, and we are their partners. Now, how other international players, they do it through sourcing overseas or working in some other methods. That's their business. But we differ is that our partners are the local retailers. Maybe our margins will be a little smaller, but that's okay. We'd rather win on the long term rather than alienating the local retailers. Now, will there be a price war? Well, the past 2 months, there's a price war. Customers are winning. Everybody's 20% or 15, 10% cheaper in some of the product. So I'm so happy that people in my region, they don't have to buy milk for their kids at 10% more expensive. There was one operator or one monopoly controlling, the human life. I think this is good for all of us. So of course there'll be a competition. But the amazing thing is that the world is open. So much new technologies are being provided to everyone that want to go into the scene. But are you planning long term? You have good people with you. Are you serious about it? Are you willing to provide quality service?
But is it the service or is it the products? How does the Middle East actually shop? What's selling at the moment and what will sell in 5-10 years?
Well, if you look at the mix of what's happening on the e-commerce scene, it's not much different from what's going on in the world. People want delivery, fast delivery. People want quality.
Will they pay for the delivery?
For the time being, we're subsidizing delivery. Because, as I said, people are just learning the art of e-commerce, and that's what global companies are doing. They give it to you for free first, they get you used to this way of life, then later on take a little bit of margin, maybe control market, the usual trick. But what I'm saying is that people want it all. Want quality, want value, want consistent, want delivery time that's fast, and we want the product that they want, which changes from 1 month to another month. And therefore, you have to provide that and then get ready to provide the new thing that might be happening next month.
Okay, how important is market share? And how important is market share right at the beginning so that people get used to your platform and not Amazon's?
Market share is very important. And at the beginning, you have to be aggressive. And you have to probably provide the best service ever. You will be cutting prices as usual because we see it. It's a live competition. There's nothing wrong with that. But the good thing is that the market's big enough. 2 players can come in. But imagine if you do business in UK and there is only one operator. How fair is that to your family?
But isn't there only Amazon here?
Well, there are many other players, I think, in UK as well. I prefer that more than one player in a market. And in the Middle East, there will be more than one player and will be one of the major players in the market.
Up next, we talk the leadership skills it takes to create both the world's largest mall and the tallest building in the world. More with Mohammed Alibar next.
Emaar Properties has grown more than threefold since 2011 and expanded heavily in the Middle East and North Africa despite political instability in the region. So what kind of leadership does it take to shepherd a global company through turbulent times? Well, Mohammed Alabar, chairman and founder of Emaar Properties, is here. What kind of leader are you? Throughout the program, we were talking about encouraging your leaders, your regional leaders, and also your portfolio managers to be aggressive. Do they always need to be on their toes?
Well, I think, number one, they have to be relevant because the change that's taking place in the world. So are you relevant? And the other thing I like is that I think we all have to believe in the reset. Are we doing this upgrade? Are we upgrading every 1 month? Because there's so much happening. And do we really act? I mean, that's, so we have to be relevant, we have to act, we have to have discipline, we have to believe in the best people, and we have to take care of our society. These are things that these are the elements that I really depend on to manage my business.
Okay, but what does it mean being relevant? Because in more traditional times, you could, ask a customer what they wanted, and you're saying, okay, I'm relevant. But now the change of pace is so fast.
Well, relevant is that, are you watching social media daily? What's going on with your customer? And what's going on with your business? There's no more, I'll do a research and I'll wait 30 days. How alert are you? And how alert about how your customer feel, or alert what's going on to the industry, what's going on with politics, what's going on with the economy, what's going on in new tools of management, how fast can you go? So I think, are you awake?
What do you need to be awake for more? Is it for your clients, or is it politics, or is it how your business interests are going?
Well, it's about my customer, number one, my people, number two, the society, what's going on in politics, what might happen to interest rate. You almost have to have all that construction risk in my business, what's going on in technology, what's going on in digital. You almost have to be alert of all this but number one, people. And then you have to make sure that you share with them this environment, and are they fit in this environment?
So what does that mean? What do you see your role? Are you putting the fire under your manager's feet to kind of keep them going, or do you micromanage?
I don't think I micromanage, but there's a situation where I do have to go and micromanage, and I think that's we should be able to go down in case we want to. And remember, I came from my mom's kitchen. I used to work in my mom's kitchen, and when we were all 13 kids living in one room, so I know how to do that. So I can pull back and be the chairman of the organization. But if there's need to move in, I can comfortably move in. But I have reasonably good qualified people with me. But I really think that I'm the target creator. I'm the guy who does the monthly performance reviews. I'm the guy who push the limits. I want people to work hard because I think we as human beings, our productivity is still low.
I mean, you spend a lot of time in property because that's where you came from. That was the first company. But what excites you the most in all the others that you're doing? So hospitality, retail, e-commerce.
I would say e-commerce excites me a lot because when I look at how the digital world is changing our lives, I come back to my real estate business and I say, maybe this office is null and void. Maybe this is all not required anymore. But also, if you look at the digital guys and you see how fast they work, or the process they use, or the age of people in these offices. Therefore, I really believe that the younger generation are running the world, and they run it extremely well. So much learning in the digital side of the e-commerce. But I think my investment in MEVP, which is a private equity firm that specializes only in digital and technology in the Middle East with almost 80 ventures, that's amazing learning about what's going on in the Middle East as well, and the industry that are about to come.
Do you focus a lot on diversity for your companies? Is that important?
Yes, very important, very important. And I think it's happening naturally. I mean, we don't even have to do it anymore. It's just naturally. That's how.
So do you have metrics?
We have metrics. We have KPIs for that. But as I said, it's so nice that it's really embodied in the organization. It's happening automatically, and I like that.
Do you think it will increase with time, or are you going to see more female workers?
Well, the female workers are really taking charge. I mean, if you look at the people who run my organization, most of our organization, I would say most of our organization, our food boys have to have more of that. But look at our government. highest percentage of senior people in government anywhere in the world.
Mohammed Alabar, thank you so much for joining us. He is, of course, the chairman and founder of MR Properties.
Thank you so much.
Thank you.
Thanks.
Good morning. Welcome to Bloomberg Markets, the European Open. I'm Anna Edwards, live in London alongside Matt Miller in Berlin.
Happy Friday, Anna. Today the markets say happy Friday. Asian stocks are mixed, but European and U.S. equity futures point to positivity ahead. The cash trade is just less than an hour away. Here are your top headlines from the Bloomberg terminal. 1,000 miles apart, Donald Trump and Joe Biden fight for airtime in two competing town halls. Americans head to the polls in just 18 days. Talk or walk? Boris Johnson is set to decide whether to ditch Brexit trade talks after EU leaders refuse to give a clear signal on the prospects for a deal. And Daimler gets in gear. The car maker reports a €3 billion profit as car sales recover and cost cuts filter through. Just under an hour away now here from the start of cash trading across Europe. We do have European car sales out, and they gained a whole 1.1% for the first 9 months. This is European car sales up for the first 3 quarters of the year, 1.1%, which is better than a drop, let's face it. Let's take a look at what's going on in terms of, here are the European new car registrations. Clearly 2020 has been a tough year, but it's not the only industry for which 2020 has been difficult. Take a look at what's going on in terms of futures this morning. European equity index futures are showing gains across the board. We have FTSE futures up 0.8%. DAX futures also gaining about 0.5% right now, so we continue to see gains there. In U.S. futures, the picture is a little bit more mixed and showing a lot less size. So S&P futures are just treading water. Dow Jones futures are slightly, fractionally down, and NASDAQ futures are unchanged. Anna?
Let's get to the GMM then, Matt. Interesting to see that picture recovering a little bit in terms of futures. They're flat, aren't they? But we had been a little bit more negative, perhaps. Asian equity markets drifting, looking fairly mixed, actually, this hour. Some of those markets going up, some going down. Are we in a consolidation phase for stocks, or are we setting ourselves up for some selling? I suppose we have the election coming, and maybe that is a line in the sand that many people are looking to. Big question still over stimulus in the United States. President Trump has been talking about doing something bigger than $1.8 billion, but his time running out this side of the election feels that way. Big questions around the virus and the measures that could be taken here in Europe as well. Could we see more curfews? Is that going to be the policy of choice for European leaders in the second wave of the virus and the second wave of measures that have to be brought in to tackle this? So European futures a little to the upside. US futures fairly flat this hour. Looking at some breaking news coming through in London, numbers from JD Weatherspoons. There is a sector that has been badly hurt, of course, by the coronavirus and the lockdown measures that have been brought in to tackle it. And that is a very much ongoing story because of the tiering system we now have in the UK. And in some of those tiers, you do see pressure very much on the hospitality industry. So we'll certainly keep an eye on that statement coming through there. The revenue number is what we've got so far. Looks to be a little below the estimates, but the estimates must have been shifting around a great deal, I expect. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Good morning, Anna. President Donald Trump and Democratic challenger Joe Biden held dueling town hall events last night, 1,000 miles apart. The president clashed with the moderator and lauded his administration's handling of the pandemic. Biden offered more policy-focused answers aimed at avoiding anything that could imperil his lead in the polls. It's Brexit decision day for Prime Minister Boris Johnson. Today, he will choose whether or not to abandon trade talks with the European Union. The bloc's leaders are refusing to give him the clear signal he wants in order to remain at the table. The EU's communications also riled Britain's lead negotiator by failing to include a commitment to compromise on the EU side. President Trump is ready to lobby the Republican Party for a bigger stimulus deal. In a call, Treasury Secretary Steven Mnuchin told Speaker Nancy Pelosi that the president will lean on the GOP if the two sides can come to an agreement. The president wants a bigger rescue plan than the $1.8 trillion on offer. Senate Majority Leader Mitch McConnell says that's too much. President Trump says the US will strike much harder if the EU goes ahead with $4 billion worth of tariffs on American products. This month, Brussels won permission from the World Trade Organization to impose the duties after a ruling over illegal state aid to Boeing. The European Union will likely hold fire until after the presidential election. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Thanks very much for that, Laura Wright, here in London. Now, Asian stocks are mixed, while US and European equity futures are pointing to the green. Meanwhile, Europe is clamping down again amid a new surge of coronavirus infections, prompting tougher curbs, of course, in London, as we saw yesterday, and a curfew in Paris. Plenty of talk about what the Italians might do next as well. Let's get into a conversation about how this meets markets with Christine Aquino from our Markets Live team. Christine, interesting to ask the question of the day today then to you and to see what kind of responses you've been having. We use the word lockdowns. I feel it should come in inverted commas these days because it means so many different things to so many different people in so many different geographies. But how will restrictions on movement, should we call it that, or restrictions on our normal lives affect European stocks? Just as one example, we had numbers from JD Weatherspoons, a pub business this morning. They say the outlook for pubs is even more unpredictable, and one can only imagine that is true. But what kind of responses are you getting then in terms of the link between restriction and stocks?
Hey, Anna. Yeah, I mean, it's definitely not a positive picture, that is for sure. I mean, yesterday was a great example of basically how any announcement on new curbs or restrictions, as we put it, on movement in major cities in Europe could really do a number on markets. Yesterday really was kind of the first day in a while, from what I recall, that all markets, bonds, stocks, FX markets even were moving in tandem in this risk-off move, and it really did coincide with the timing of the announcement of London curves, Paris curves, and this really just goes to show that the unpredictability of the response to the virus and how that situation is constantly changing is still probably the primary driver of uncertainty in markets. And while, we started off this week focused on the politics side of things with the Brexit deadline, with inverted commas, supposedly today, we finish it talking about these restrictions and how they're impacting markets.
You've been in the UK long enough to say inverted commas when you mean quotes. Let's talk about the Brexit deadline. Are markets expecting this to be done now, or are they expecting it to just drag on?
Yeah, Matt, I think there's enough experience in markets dealing with Brexit that they're just probably willing to roll with the punches. We have seen, I think, signs of a bit of Brexit fatigue in markets coming into this week, wherein markets weren't really pricing all that much in terms of a catastrophic no-deal scenario. That's probably to do with the fact that, traders looking at this are already seasoned when it comes to tracking the changing fluid situations and therefore refraining from making any big bets. And I think that's kind of what we're seeing now. I think a lot of the base case on the street is still some kind of a deal, whether it's a skinny trade deal or something that will keep things going. I think that still is the base case in terms of kind of the headlines in between getting to that process. I think there are just investors and traders getting increasingly wary of trading it headline to headline and instead waiting for the definitive turning points. That could be today, but it could also be in the next couple of weeks.
Yeah, it's really interesting also to see the way that the market's thinking has shifted on the difference between deal and no deal, Christine, compared to 2016, perhaps, when a deal could have been much bigger than the deal that has been dictated by the red lines on both sides. Let me ask you a little about the jobs picture in the United States, because there we see the clearest example, perhaps, of a market that has been allowed to react, a jobs market that has been allowed to react more fully to the coronavirus. We didn't see the same kind of furloughing programs as in Europe. And so we thought maybe we'd seen the worst, at least for the first wave, but then jobless claims unexpectedly increased. What do you see in the U.S. Jobs market right now?
Yeah, it is still kind of a worrying trend, Anna, especially considering what's going on in the bigger economic backdrop, wherein we still see the virus not really relenting in terms of case rates. We're also seeing risks of insolvency throughout the United States, and that, of course, will have great implications for employment down the road. And of course, we have the stimulus talks as well, which are at a stalemate, and there's not really much prospect of that getting through until after the elections. And so all this combination really does just make for great job insecurity, and that adds to the first wave of joblessness that we've already seen, or the earlier wave, I should say, this year. And then there's this kind of second order impact from eventual insolvencies, eventual bankruptcies that would kind of feed that joblessness cycle. So it's really not looking great on that front either in the U.S. And I think the stimulus, getting that through, would help a lot. But again, that's going to be delayed until at the very least, or at the very earliest, after the elections. And of course, it will all be a question of what shape is that going to take, depending on the composition of government post-November 3rd.
Christine, thanks so much for joining us. Christine Aquino there from our Bloomberg MLive team. You can check out her work and the work of her team as well by typing MLIV Go on your Bloomberg terminal. Coming up, 1,000 miles apart, President Trump and Joe Biden clash from afar in dueling town halls. We bring you all the details next. This is Bloomberg.
I think the best outcome is a quick outcome for the election. The markets don't like uncertainty. I think the blue wave is out there. I think that's partially priced into the market, and I think that's a function of whether regardless of the outcome of the election, I think the expectation is continued fiscal support. It's not a question of when, but it's a question. Excuse me. It's not a question of if. It's really a question of when and how big.
That was Morgan Stanley CFO Jonathan Pruzan telling Bloomberg a Biden victory in the upcoming US election is partially priced in. Let's stick with that theme. Donald Trump and Joe Biden took part in separate town halls last night. The president and his Democratic rival clashed on various issues, including, well, they clashed at distance, including the wearing of face masks.
As far as the mask is concerned, I'm good with masks. I'm okay with masks. I tell people wear masks. But just the other day, they came out with a statement that 85% of the people that wear masks catch it. Well, so, you know, this is a very I know that study. That's what I heard, and that's what I saw.
It's estimated by every major study done, from the University of Washington to Columbia, that if, in fact, we wore masks, we could save between now and the end of the year 100,000 lives.
And avoid lockdowns?
And avoid lockdown, yes. You don't have to lock down if you're wearing the mask.
Some of the overnight commentary then on the US election from the contenders. We're joined now by Annika Trion, Managing Director for Equities at Kempen. Annika, it is difficult to call elections. It is also difficult to call the link between elections and the stock market. You just have to look at 2016 and the quick rethink markets did around that particular outcome. What is your expectation here? And do you think, like Morgan Stanley was suggesting, that the blue wave is partially priced in?
Hi, Anna. Great to speak to you again. I think your reference to the 2016 election is relevant and particularly interesting because in the last election period, 2016, markets couldn't make up their mind. On a Trump victory announcement, stock futures were down 5%. That triggered a circuit breaker to halt trading. It was a pretty dramatic period. However, the next day, the index closed plus 1%. Now, with that as a reference, you would argue this time round, it's much more confusing. The likelihood of a contested election is still very much there. And more importantly, it's a very unclear path how the market should read what the outcome will be. Several weeks ago, months ago, you would argue by now, markets felt Trump's victory would be very much supportive for the stock markets, anti-regulation, etc. That whole rhetoric is absolutely reversed. And to your point, the blue sweep has now become synonymous with being good for stock markets, good for SMEs with targeted fiscal response over there. And what you see right now, because the market is lacking conviction right now, because the economic growth situation has become so fragile, markets are essentially whipsawing around in what is arguably the most volatile election period in living memory, whereby it feels that we're watching a prime-time soap opera, which, especially over the last 2 weeks, has left us with a political impasse. And ultimately, it's just such a shame to see real economic needs being tangled up into political strategy making, and that makes market participants very anxious.
Right. Of course, we're almost there. I mean, November 3rd isn't that far away, Annika, and as you've said, you know, the markets are basically pricing in a blue sweep. I assume that means the markets expect, at the very least, Nancy Pelosi's $2.2 trillion stimulus package to come shortly thereafter, possibly more. What about the weeks-old concern that we could have a contested election result, or that President Trump would refuse to leave the White House if he doesn't indeed lose the election? Are market participants hedging against that, you think?
It's a great question, and let's go back to what the state of the markets is today. And what I find the most fascinating factor, to me, it feels that markets want to go up. Equity markets are looking for an excuse to be positive. Why do I say that? Well, let's rewind back to the last 2 weeks. Last week, it all started getting messy when Trump made a statement that, you know, not willing to negotiate talks until after stimulus talks until after the election. The day after, he did a U-turn where he did support Powell's cry for action, for stimulus, and that led to 4 days of green stock markets. So it does feel that the market wants to go up. The TNED, there is no alternative trade, is very much in force. A third of fixed income instruments are negative yielding. Volatility levels are back in a more normalized 20s range. But to your point, what happens if there is a contested election? What then? What are markets going to do about it? The old rule is markets do not like uncertainty. Now, if you take that factor and you sort of put adjacent to that, what is the latest situation of the economic recovery? I think it's the latter which will really define how markets will handle the volatility around a contested election. On one hand, you would argue the recovery we've seen thus far has been absolutely remarkable, uncharted, unemployment going from north of 10% to south of 8% in 2 months. It took us 3 years to achieve that in the last recession. We've already got back 50% of the jobs lost. On the other hand, we've probably already enjoyed the lowest hanging fruit, and unemployment is becoming more permanent. So we're going to have to watch this data very closely, as the market has also done with the latest jobless claims report, which did not look very encouraging, and take it from there.
All right, Annika, great to get some time with you. We're going to keep you around a little bit longer. Annika Trion from Kempen stays with us on the program. Coming up, from London to Paris to Berlin, lockdowns creep back onto the agenda in Europe. How much political capital do leaders have left to fight the crisis? This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are right now about 38 minutes away from the start of cash equity trading. You can see European futures are pointing higher. CAC 40 futures up 0.7%. DAX futures now up only 0.2%. Europe is losing its fight to keep economies open. From London to Paris, stricter virus measures are creeping back onto the political agenda. And here in Germany, new cases have hit yet another record high. The health minister, Jens Spahn, told me that tracing capacity is reaching its limits.
If I take the ICU capacities, if I take hospitals, testing capacities, today's point of view, it's all manageable. That's not the problem right now, today. The problem is that day by day, with increasing numbers, our local authorities are not able anymore to trace, and then you lose track, and then numbers are going high exponentially.
Annika Trion from Kempen is still with us. Annika, what do you think we are facing here? Are markets far still from pricing in reversion back to lockdowns?
Europe is a tricky one, and this is, well, the rhetoric around Europe is changing rather rapidly. 3, 4, 5 weeks ago, Europe was still in the camp where it was respected as having one of the better policy responses regarding COVID globally. And you saw asset allocators take another serious look at the region, it's green too cheap, etc. With COVID cases reaching new peaks in major economies in Europe, with governments talking about renewed lockdowns again, it is injecting an enormous amount of fear in the markets, a risk aversion towards the region, which has already been the biggest laggard in global asset allocation for a very long time. And most importantly, it is really hampering and weighing down on the animal spirits, which are the animal spirits of Europeans, which really lies at the crux of economic recovery.
And so in amongst all of that, Annika, does that still add to the investment case? If we lack animal spirits, maybe we do more online shopping. Does that play to the investment case for technology, for healthcare, and for those businesses that have done well out of lockdowns earlier this year?
So that's also a fascinating one, because on one hand, the answer is, of course, yes. On the other hand, what you saw already a month ago or so is the approach to some of these tech stocks, which were seen as the COVID winners, also becoming less straightforward, because if you are going against a backdrop of lower economic growth, especially in the more discretionary consumer expenditure areas, even if they are very much digitalized and tech, do consumers feel comfortable with their level of disposable income to keep running these expenditure lines? And the issue is today, as I mentioned, we're speaking about animal spirits. The issue is today that, economically speaking, we are injecting fear into the wrong cohort of people. It's the baby boomers group, which control around 70% of global domestic disposable income, actually. And this is the 50s plus to 70s plus group.
Okay, Annika, sorry to cut in, we're just up against a break, but thank you very much for joining us. Annika Trion, Managing Director for Equities at Kempen. Thanks very much for your time. This is Bloomberg.
Meaning there. Yes, got you, thank you. Heading over, right.
Hey, yes, it is. Okay, hey, Robin, it's Danny. Can you hear me?
Hey, Danny, I can. How are you this morning?
Wonderful. I'm good. How are you?
Very good. I can't see you, but I can hear you.
Well, it's probably more important, so that's at least there's that. Yes, I'm looking forward to this. We have just one of my colleagues is going to go over some of the most important headlines, and then Anna is going to intro us.
Great, great.
Yeah, perfect. Are you able to just sort of like you're gonna keep, okay, excellent, thanks.
Welcome back to the European Open. 30 minutes until the start of the equity trading day for this Friday morning. You can see that European equity futures point to the upside. US futures look a little more circumspect, though, flat to negative. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. Local leaders in the UK are in revolt after rejecting the government's regional lockdown. Politicians in Manchester, Northern England, are refusing to move to the highest level of restrictions, Tier 3, unless the government provides more financial support. UK government scientists are also pushing for an emergency national lockdown to slow the rate of infections. The latest study by the World Health Organization has found remdesivir and some other antivirals have no definite effect on a hospitalized coronavirus patient's chances of survival. The study hasn't yet been peer-reviewed. Gilead, which makes remdesivir, says it's unclear if any conclusive findings can be drawn from the study. President Trump is ready to lobby the Republican Party for a bigger stimulus deal. In a call, Treasury Secretary Steven Mnuchin told Speaker Nancy Pelosi that the president will lean on the GOP if the two sides can come to an agreement. The president wants a bigger rescue plan than the $1.8 trillion on offer. Senate Majority Leader Mitch McConnell says that's too much. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Laura, thanks very much. Laura right there with your first word news. Now, Europe's private credit sector has expanded rapidly since the financial crisis as banks retreat from the riskier corners of the lending market. But the pandemic is raising new fears that direct lending has reached the limits of its money-making potential. Joining us now is Bloomberg's Danny Berger for an interview with one of Europe's largest private credit funds. Danny?
Matt, thank you so much. Yeah, with private credit more important now than ever, I'm thrilled to say that joining me is Robin DeMar, who oversees about $10 billion as managing partner and co-founder of Park Square Capital. Robin, first off, thank you so much for joining us. Now, this is possibly the first crisis we've seen where a large sum of debt isn't with the big lenders, it's with private credit funds such as yours. What does that mean for the health of the financial system?
Well, Danny, good morning. I think, and one of the things that I can say right away is thank God really for the regulators coming out of the global financial crisis, because I think they made the banks much healthier and pushed a lot of the risk-taking in leveraged lending into a better capitalized, better shock absorber for the system, and that is private credit funds like ourselves. Over the last several years, we've seen a lot of growth in the market as banks have retreated from the lending space. And really what's occurred is, as it relates to leverage lending, people like ourselves have really stepped into the shoes of the banks and have become basically the relationship lenders for the private equity industry.
But if you've stepped in here, Robin, are you more accommodative to struggling firms if you're also taking on more risk, right? Because one of the concerns with bank loans is that if they're pulling back from the market, you eventually get a spiral of pulling back, which turns into a credit crunch.
So I think the key for us and really for all lenders, I think, is credit selection. We really focus on three industries: healthcare, software, and business services. That's where most of the portfolio is invested today. We've emerged from the crisis very strong. We have very few problems across the portfolio. And I think a lot of that is due to the alignment of interests that private debt firms have with their investors. And I think it makes us better credit selectors, and that allows us to be more front-footed in the crisis. So unlike banks who are under increased pressure today with these further lockdowns, really just heaping more pressure on banks, which are continuing to exit the market. Private credit firms like ourselves, if you have a clean portfolio, you can be front-footed in the crisis and lending more capital.
Right. Well, if you're coming out of this a winner, then Robin, who are going to be the losers of this crisis? Who is struggling?
So I think, Danny, the real issue is credit selection. I think what you're going to see is growing differentiation among managers. Heading into the crisis, we heard a lot about buying the market and passive index tracking and all of that. When you think about what's happened to credit markets, what's absolutely critical is to choose your assets carefully, do your work thoroughly, be very diligent in lending. And I think for managers who have done that and carefully built portfolios, they're going to be net beneficiaries with a lot of capital to invest and allowing them to be front-footed in helping the economy come out of this. And I think for managers who've been imprudent and just deployed a lot of capital in an arms race over the last several years, there are going to be some issues.
Robin, you work with a ton of companies that you lend money to. You're perhaps in a better position to speak about this than a lot of the people we talk to. Is there being enough done to help struggling businesses in terms of stimulus?
So I think we've reached the limit of what monetary stimulus can do at this point. Interest rates are low. We're seeing a lot of risk-taking in liquid markets. And I think the ECB and the Fed have done really what they can do. The next phase really has to be much more targeted government efforts to help business. And no, I don't think enough is being done. I think really Europe has done a pretty good job. The UK and the US can do a better job of targeting capital to businesses that really need it. And what we're seeing is a bifurcation of businesses that are doing very well through this, more technology-oriented, and things like hospitality, restaurants, a number of small service businesses that are struggling and need capital.
If they don't get that capital and they don't get that fiscal support, what is the scenario you think will play out?
I think we're going to see, unfortunately, more insolvencies in the hospitality sector. I think restaurants and leisure, hotels, I think a lot of these businesses are in really dire straits. And it's difficult to find an economic solution where there's not going to be necessarily a business left at the end of the day. I think that's the real concern, which is if you can look forward through the crisis and know that if a company can just hang in there, it's going to be fine, I think we can finance those businesses. That's not a concern. I think the bigger concern is businesses where it's really not clear that they, even if they can hold on, that they're going to be in a position to be competitive going forward. And I think that's the big challenge. It's not so much the near-term dislocation. Many businesses can cope with that. It's the structural changes that come out of this. And will certain businesses even be required to exist coming out of the crisis?
Well, Robin, you seem pretty confident, though, that you can keep the businesses in your portfolios liquid, supplied with money. But do investors feel the same way? Preqin data from the last quarter shows that this is the first quarter in 19 years where no new European private debt funds have closed. What's going on there?
So I think this is just sort of the normal impact, or what you would expect to see when investors over the course of, for example, the summer, were really just trying to figure out what was happening in their own portfolios and getting their own houses in order in the midst of a crisis. What we've seen is a tremendous resurgence of activity coming out of the summer. So we're as busy as we've ever been with investors right now. Obviously, through the summer, it was a big challenge. A lot of our investors want to meet face-to-face. They want to do on-site due diligence and do their work. And so the crisis has proved to be a challenge, which now people, I think, are coming back into the market, and we've seen a big resumption of activity.
Right. I guess COVID changing both the companies you invest in and the way you do business itself. Robin Demar, thank you so much, managing partner and co-founder of Park Square Capital. Thanks for joining us. Anna, Matt?
Danny, thank you very much. Thanks to Danny and to Robin. Really interesting conversation there, in particular the nature of the change that business has to cope with, the structural versus the near term. Lots to think about there. Thanks very much for bringing us that conversation, Danny. Up next on the program, speeding away from the pandemic, Daimler's earnings beat market expectations, and even the automakers' results from a year ago. We'll get the details next. This is Bloomberg.
not. They're really focusing on earnings right now, and they had a big strategy kind of revamp a few, I think it was last week, where they talked about that they're not going to be looking at numbers anymore in terms of cars sold. All they want to do is get good earnings. Now, it's obviously too early for that to have taken place. That doesn't explain this great quarter here, but looking forward, that's what they're going to be focusing on, is getting that profit high, and using that, that's when they want to start selling more electric cars, is from a nice kind of cash and cost base.
I'm seeing one analyst describe these third quarter numbers as tasty, Oliver. What has the response been? What's the explanation for how these numbers ended up as positive as they are?
Yeah, tasty is a good word. You know, the one thing is that the third quarter was the quarter where everything opened back up. You know, the second quarter, you had all the large-scale lockdowns. Nobody was buying cars. And then the third quarter, you know, things started opening up again. Now, the other thing is there's also a lot of incentives in Europe right now. You know, France had a huge electric car incentive. Germany still has one. Spain has one going on right now. So there's a lot of incentives by governments to buy cars. And that could definitely go a long way to explaining at least some of these numbers that Daimler posted.
What about the electric car shortage in Germany? I was looking at a piece from Bloomberg Intelligence today from Michael Dean saying that BMW, Volkswagen, Daimler, they still have a long way to go before they sell enough electric cars to avoid fines this year.
Yeah, there's definitely still a lot up in the air. You know, the fourth quarter isn't done yet. And like you said, we have those CO2 rules coming up. Some automakers or some car makers like BMW are saying, you know, we're going to meet these goals just fine. We're selling a lot of plug-ins and things like that. But even Daimler said, you know, it's going to be tight. And they do need to sell a lot of electrics and a lot of hybrids in order to reach those goals. Now, what they can also do, of course, is pool together with other car makers and, you know, through that, basically reach their goals. And there's, it's really looking like a lot of car makers are going to be eyeing that option much more closely now. We saw Renault opened up, you know, to possible entrance in a pool just this week. So there's going to be a lot of movement on there in the next couple of weeks.
Ollie, thanks very much. Bloomberg's Oliver Sackgow joining us there with the latest on Daimler and indeed the sector also making news with those new car registrations today. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. Ant Group is planning to increase the valuation target for its IPO to at least $280 billion. Sources tell Bloomberg that's due to the strong demand for the offering. Ant aims to raise about $35 billion in the sale. Despite the US weighing restrictions on the Chinese fintech giant, it could be the world's largest IPO ever. Twitter suffered an apparent worldwide outage that lasted about an hour and a half. Service was restored and tweets began appearing again at about midnight London time. The company says it saw no evidence of a security breach or a hack, but it is investigating an irregularity in its APIs that led to different software systems to talk to each other. Almost 2,000 Robinhood Markets accounts were compromised in a recent hack that siphoned off customer funds. Sources told Bloomberg of the figure, a sign the attacks were more widespread than previously thought. The hack saw a torrent of complaints on social media. Investors were annoyed at the difficulty in contacting the brokerage, which doesn't have a customer service number. That's your Bloomberg Business Flash. Matt, Anna.
All right, Laura, thanks very much. Laura right there in London with your Business Flash. Now, Oaktree Capital co-chair and co-founder Howard Marks said in his memo to clients, by dramatically lifting the markets, the Fed may have caused some people to believe that it will always do so, that there's a Powell put that can be counted on to keep things humming. And speaking to our own Eric Schatzker, Howard Marks said that sometimes it's better to let businesses fail.
The Fed and the Treasury are taking extraordinary actions these days to avoid a worse condition than we have to have. Many of us think that that it's not appropriate to keep unsuccessful companies in business. I think there's a case I'm not an expert on the airlines, but I believe that there's a case that can be made that they have to be smaller, that fewer people will fly over the next 5 years than flew over the last 5. And the best way for a business contract is to go through a reorganization and bankruptcy, discharge onerous contracts, and reduce their overheads. But all the airlines would be facing financial difficulties now if it weren't for number one, the specific bailouts of the airlines, and also the general help to the economy. And obviously, the Fed and Treasury have targeted the airlines for specific largesse to preclude their bankruptcies. They don't want a spate of bankruptcies. Now, the Obama administration permitted Chrysler and General Motors to go bankrupt, and I think that they were. I think that was helpful to them. And
is that to say, Howard, that the Fed, in your view, and I do want to make sure that we understand how you see things, that the Fed is forestalling the inevitable, that because of the pandemic and because of the impact that the coronavirus and the fear it has produced is going to have on global travel, for example, that airlines might go bankrupt, or at least they're going to have to resize dramatically in the future, regardless, of how much money the Fed throws at them, and the same would apply, presumably, to cruise lines?
Well, I think that resize is very well might be in the cards. As I say, I'm no expert on the airlines, but a bankruptcy is usually a good tactical way to do that, because you can discharge onerous contracts and convert debt into equity.
Well, since you bring up bankruptcy, Howard, one manifestation of the lack of return you have noted in credit markets is what's going on right now in distressed credit. Have you ever witnessed the kind of open warfare that is unfolding today among creditors? One investor whom I know well calls it fratricide. Well,
you might call it fratricide. Somebody else might say people energetically exercising their fiduciary duty to maximize the outcome for their clients. I would tend towards the latter. We are not brothers in the sense that we should take it easy on each other and not maximize the interests of our clients. But, the problem, Eric, is that over the years, in pursuit of yield in a low return environment, and we have had a low return environment ever since the global financial crisis, which occurred 12 years ago. Ever since then, we've been in a low return environment, and people have been scrambling to get yield. They've been competing to buy securities, which gives the issuer the upper hand, which permits the issuer to strip out the covenants and the protections as to what they can do to the lender. And when the protections are gone, then it becomes easier for aggressive people to pursue recoveries for themselves and their clients.
Interesting conversation. That was the Oaktree Capital co-founder Howard Marks speaking to Bloomberg's Eric Schatzker. We are 9 minutes away from the start of equity trading for this Friday morning. We'll get your stocks to watch next, including LVMH, as the Louis Vuitton owner enjoys an unexpected rebound with good third quarter sales. Some high margin businesses beating fairly solidly. We'll get details next. This is Bloomberg. Welcome back to the European Market Open. 7 minutes to go until the start of the European trading session. Let's get into the stocks that we are watching. We have spent a lot of time on really important conversations, and we haven't maybe done all that much stock specifics this hour, and there are some really good stories out there. Danny Berger has got a preview for us. LVMH is one of them, Danny.
Yeah, really impressive numbers here, Anna, at LVMH. Their sales going up by 12% in the quarter, where analysts had predicted a decline of 0.9% for their leather and other goods. So it's really dresses, high-end purses, those sorts of things that propelled LVMH's earnings forward. And no surprise as well that China is leading the surprise rebound here for their sales.
All right, so that's the LVMH story. What else are we watching here? Rio Tinto, for example?
Right, Rio Tinto, their iron ore shipments falling by 5% in the third quarter. Part of this had to do with some of their port difficulties, but they really pointed to some of the consumer appetite, some of the appetite for their products in China with rebounding growth there that they see as a positive going forward, and some of the commodity intensive stimulus. However, they also point to the new lockdowns throughout the world really that threaten that recovery that Rio Tinto is seeing.
Yeah, they're cautious on China a little bit, aren't they, as well? What about Weatherspoon then, Danny? We went through those numbers about 55 minutes ago.
Well, Weatherspoon suffering here, of course, as bars are closed. I did want to point out what Tim Martin, the Weatherspoon's boss, says in this report, calling out the erratic policy he's seen from governments, really praising the soft touch by Sweden. Still, that pre-tax loss coming in at £44.7 million. Matt?
All right, Danny, thanks very much. Danny Berger prepping us on a couple of the potential movers. When we come back, it's the market open with futures pointing higher. This is Bloomberg.
Minutes to go until the start of cash equities trading. Here are your headlines. 1,000 miles apart. Donald Trump and Joe Biden fight for airtime as two competing town halls. Americans head to the polls in 18 days. Talk or walk? Boris Johnson is set to decide whether to ditch Brexit trade talks after EU leaders refuse to give a clear signal on the prospects for a deal. We expect to hear from Boris Johnson later today. And Daimler gets in gear. The car maker reports a €3 billion profit as car sales recover and cost cuts filter through. Matt.
All right, so futures are pointing higher. Maybe the markets are expecting to see more money from governments. Here you see Euro stocks, 50 futures up 0.8%, FTSE futures up 0.9%. Well, almost the same, 0.9%. DAX futures gaining about 2/3 right now. Little fluctuation in futures this morning, so a little bit of volatility there. Let's take a look at the live cash trade. The FTSE, I'm sure, will be the first out of the gate as usual. Pull up the GMM screen on the Bloomberg terminal. That's the global macro mover screen. Just type GMM Go. And if you do that, I promise you'll see a number of columns, each one representing a different kind of risk asset. The far left-hand column, there you go, is showing the equity indexes. It'll populate as they open up. The CAC open up 1.4%. The FTSE gaining 0.8%, as is the IBEX in Spain. So we are seeing gains on continental as well as the UK continental indexes as well as the UK index on this Friday. Markets moving higher. With that, let's get the Bloomberg First Word News. Let's go to Laura Wright. Laura?
Thanks, Matt. President Donald Trump and Democratic challenger Joe Biden held dueling town hall events last night, 1,000 miles apart. The president clashed with the moderator.
We keep on, so you can keep on.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
As far as the mask is concerned, I'm good with masks. I'm okay with masks. I tell people wear masks. But just the other day, they came out with a statement that 85% of the people that wear masks catch it. So, you know,
they didn't say that. I know that study.
That's what I heard, and that's what I saw.
It's estimated by every major study done, from the University of Washington to Columbia, that if in fact we wore masks, we could save between now and the end of the year 100,000 lives.
And avoid lockdowns?
And avoid lockdown, yes. You don't have to lock down if you're wearing the mask.
Former Vice President Joe Biden there,
together with the President of the United States separately in 2 town halls overnight. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Equities up, session highs. We advanced 0.4%. The Treasury curve steeper, retail sales delivering an upside surprise on the path forward down in Washington. Looking forward to a conversation a little bit later this morning, in about 20 minutes, with Henrietta Trays, Veda Partners Director of Economic Policy. That coming up shortly on Bloomberg TV, Tom.
She was lights out the last time we talked to her. That will be really, really interesting to see the policy prescription and energy that she sees forward. Look for that on one of Mr. Farrow's properties here coming up. Futures advance up 14, Dow futures up 134. What we're going to do right now on a Friday, the ebb, the change of the seasons, of course, Dr. Fauci talking about we will have different Thanksgivings this year, is we're going to stop the show and talk about the unspeakable that's out there. Fred Dean of the San Francisco 49ers died last night. I believe it was last night. It's 68 years old. He died of a virus. Chris Christie, the governor of New Jersey, former governor of New Jersey, 10 years younger, just got out of 7 days of intensive care. We need to talk to somebody, not a pundit, not blathering away, but a pro. Mercedes Carnathon is with Northwestern, where she is prodigious in epidemiology and particularly in preventative medicine. On weight in this virus, Dr. Carnathon. Mercedes, how linked is this virus to weight?
Well, you know, one of the first signs that we saw was that individuals who were overweight or obese had worse outcomes. And part of why they have worse outcomes is it is more challenging to treat them. So not only are they having a more severe inflammatory response when they contract the virus, which is, you know, a significant problem that often leads to hospitalization, but once we get them in the hospital, it's harder to intubate them, and it's harder to treat individuals who are overweight or obese.
It is a nation obese. There can be any ways to cut it here as well. We're not all going to go out and lose 30 pounds, so we do better when we get the virus. Does a vaccine benefit people overweight equally as those that are relatively less obese, that have a body mass index under a certain level? Is a vaccine an equal opportunity good thing?
You know, we certainly hope so, and that's why we do clinical trials, and that's why we need people who reflect the diversity of the United States in those trials. 2/3 of adults are overweight or obese. 20 to 30% are obese, even higher rates in some communities. And so it's really important that we get all of these types of people in our clinical trials so that we can ensure that the virus works under a number of different scenarios as far as health history and a number of different scenarios as far as individuals' behavior and background.
Dr. Carnathon, let's talk about the here and now, since we're probably not going to get a vaccine for the next 3, 4, possibly longer months ahead. How bad could it get here in the U.S., looking at what's going on currently in Europe?
You know, I think looking at Europe is the lens we need to take. All along, we've been about 4 to 6 weeks behind Europe, and that cases are again surging in Europe suggests to me that as the winter months come upon us, as we have more time indoors, and particularly with the holidays where we want to be together, I do see that this trend that we have right now of high case rates per day that are as high as they were in July and starting, you know, to approach what we saw at the beginning of the pandemic. Unfortunately, I don't see a rosy future in the next 3 months.
Dr. Carnathon, how much is this people getting really tired of having to distance from one another and wear masks and take the necessary precautions? And how much is this the actual change in weather, that colder weather makes it easier for this virus to spread?
You know, I think the large part of what we're seeing is that decrease in vigilance. It is hard. It is hard. And I think, you know, if you don't have the visual daily reminder of a loved one who died, of a friend who suffered from it and was hospitalized, and maybe one of those long haulers who's still suffering, it's easy to say, well, can't I just take a chance and have some fun tonight? I've had these slip-ups. And I know the data very well. And I think universally, this is where we really have to recommit and dig in and say, maybe not this holiday season, but we all want to be able to be together next holiday season.
Mercedes, out of this pandemic, out of this natural disaster, can we see a shift in diet priorities in the nation? Can we see a shift in nutrition where we link a lesser weight to a healthier America?
You know, obesity has been a central part of my research program in preventive medicine, and there are many challenges and barriers to preventing obesity. You know, it requires, there's no magic pill to treat obesity. It requires sustained commitment to behavior change and the resources to be able to make that. It has been hard for people in quarantine to exercise at the same level that they were able to. And for those of us in northern climates, it's going to become hard to be outside. I think we need to maintain a focus on weight, on controlling one's weight, but I'm not sure that it's going to rise to the level of the priority of what we need as far as preventing coronavirus spread right now.
Dr. Carnathan, thank you so much. With Northwestern and, of course, in preventive medicine as well. Mercedes Carnathan. Lisa, I just think it's really quite extraordinary here to see where we are in this pandemic. I mean, the deterioration in Europe this week, I'll be honest, I'm supposed to be in tune with this. Lisa, it captured me by surprise.
It has been, especially in Italy, because wasn't there even some discussion about herd immunity, and that was dashed because they've seen record numbers of cases even in Italy.
Yeah, Fauci tore herd immunity to strips yesterday. He was scathing about it.
But I think that the point that Dr. Carnathan was making, that the U.S. is 4 to 6 weeks behind Europe, is a warning sign. And one thing that I find interesting, if you look at the data, the numbers are going up faster in rural and suburban areas than they are in urban areas that perhaps still have the memories of what happened earlier in the year. This idea, to her point, that it is the lack of vigilance, is we're all getting tired. Do we really want to hear about how we have to lose weight and stay inside and not see anyone?
Who are you talking? Oh, come on! Look at you! Come on, Lisa. You're cut and chiseled. Who are you talking about?
I'm just saying. We just had
you talk to Mrs. Keene on the break? Okay, great.
I'm going with the data. Check.
Okay, great. oh, good. An 8th glass of water today.
Yeah,
Wonderful.
Water. That's right. I mean, look. It's just this is what we're all facing right now. How do you stay inside, maintain mental health, as well as physical health?
Yeah, hit the weights. That's what I'm going to do. Lisa, thank you for putting me in my place. We'll give you a data check to put you in your place. Futures up 14. They advance off good retail sales statistics. The VIX 26.76. The governor of New Jersey in the 2 p.m. hour. Stay with us on Bloomberg Radio and Bloomberg Television.
The Census Bureau has asked Congress for a 120 extension. I don't know that you even have to ask, and I think 120 days isn't nearly enough.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From New York and London, for our audience worldwide, good morning, good morning. The countdown to the open starts right now. 30 minutes away from the opening bell, equity futures up 0.4% after a nice upside surprise on U.S. retail sales. We begin with the big issue. Two presidential candidates, two competing town halls. President Donald Trump talking up a V-shaped recovery.
We have the greatest economy we ever had. We had to close it down. We saved 2 million lives. We're opening it up. We have a V-shape. And it's coming back. It's coming back very fast.
Vice President Joe Biden talking up a K-shaped disappointment.
He talks about a V-shaped recovery. It's a K-shaped recovery. If you're on the top, you're going to do very well. And the other thing and if you're in the bottom, or you're in the middle or the bottom, your income is coming down. You're not getting a raise.
18 days until Election Day and the fiscal negotiation merry-go-round still spinning on Capitol Hill. Secretary Mnuchin, Speaker Pelosi, telling her that he can lean on Leader McConnell to pass a deal as McConnell suggests both sides are discussing a proposal he can't sell in the Senate, saying, quote, we're in discussions with the Secretary of the Treasury and the Speaker about a higher amount. That's not what I'm going to put on the floor. It's a much larger amount than I can sell to my members. All of this leaving investors and market participants worldwide looking beyond November 3rd.
Markets, regardless of the outcome of the election, are expecting continued fiscal stimulus.
It's just a matter of when it's going to occur.
It's not a question of if, it's really a question of when.
Whether there's stimulus before or after the election.
Markets are looking ahead to that now, saying
we're not expecting to see much, if anything, out on stimulus.
In the short term, we're probably not going to get stimulus.
I think we will get more fiscal stimulus after the election.
Perhaps the middle of the first quarter of next year.
Markets are pricing, a reasonably high probability of a blue wave.
There's a good chance that we get a Democratic sweep.
It takes another big leap in fiscal spending next year.
A massive fiscal package sometime either in January or February.
That makes the next couple of months pretty precarious for the markets.
Let's bring in Kevin Cirilli, Bloomberg Chief, Washington correspondent down in D.C. Good morning to you, Kevin.
Good morning, Jonathan. Two main collision courses that we're following and tracking, especially this morning. The first on the fiscal stimulus front. You just saw those tweets from Drew Hamill, who is, of course, an advisor to Speaker Nancy Pelosi on the communications front, really delivering an optimistic message following the Speaker's meeting yesterday with Treasury Secretary Steven Mnuchin. I was struck by the tone of those comments, especially with the foreshadowing that President Trump really could step in here to put pressure on Senate Republicans who are apprehensive and nervous about spending so much money. Again, we should note there are several prominent Republicans in the Senate. Look at Senator Ted Cruz, for example, who are very wary of having to spend upwards of $1.8 trillion on the fiscal stimulus front. So the timetable is still very much unknown and the final price tag. But again, it is a question of when and not if. But then secondly, on the election front, last night, 2 dueling presidential town halls, not much learned in terms of policy as it relates to either side of the aisle. However, I'm looking at the data on the mail-in ballots. According to the Florida State University election tracking metrics, 19.8 million Americans have already sent in their ballots for mail-in voting. Democrats far outpacing the number of Republicans who have early voted. That typically is a sign that Democrat turnout is going to be up. Again, we've never had a pandemic of this sort to impact mail-in voting, but the early indicators suggest that Democrats are far outpacing Republicans in terms of mail-in ballots. So that's something that is very much potentially an early indicator of turnout that we'll be watching closely, Jonathan.
Kevin, 2 stories there, the fiscal stimulus effort and the election. And they're both connected. And as far as the negotiations are concerned, is this just political posturing? The story we've grappled with all morning, Brexit on the one hand, just looks like posturing. Fiscal talks in D.C. just looks like posturing. Does Congress actually want to make a deal? And can Leader McConnell pass a deal in the vicinity of $2 trillion? I'm not sure that was true last week. It wasn't a month ago. Is it true today?
You know, I spoke with a Republican House member yesterday, and essentially I said, you know, help me walk through the potential of a lame duck session, because the biggest unknown right now is who's going to have political leverage in the month of December, because we will likely know the outcome of the election. We'll also likely know the landscape in terms of the House and the Senate majorities. And so that is really who will have the upper hand in those lame duck negotiations. That's really what we don't know. And so both sides are making the calculation that they will have the upper hand, but obviously that's a wash. And so that's really the biggest variable right now, is will Speaker Pelosi have the same leverage that she has now come December when she's negotiating? And no one can price that in because no one knows.
Nobody knows. Kevin, it's great to see you, as always. Kevin Cerruti there, down in Washington. Thank you, sir. 25 minutes away from the opening bell in New York this Friday morning. Good morning to you all. Equity futures are positive, up 1/3%, just rolling over a touch from session highs. We advance 11 points. U.S. retail sales, upside surprise, sending the curve steeper, yields just a little bit higher on a 10-year by a basis point. Your yield on a 10-year will round it up to 0.75%. That is the price action. Here's the politics. Henrietta Trays of Vader Partners saying the Senate race will be the key to future fiscal spending, writing the following. We see deficit finance stimulus no matter the outcome of the 2020 election, but the Senate results are the most critical. Flipping blue is by far the most impactful event investors can anticipate on November 3rd. The difference in spending could be anywhere between $500 billion to $4 trillion. Henrietta, I'm pleased to say, joins us now. Henrietta, let's just get our hands around that. The outcome of that vote, if we have the results and we get our hands around them November 4th, could be the difference between several $1 trillion in fiscal spending.
Yeah, absolutely. And if we're being honest, I'm being a little bit pessimistic on the scale and scope of spending that Democrats would like to see. I had a conversation a few weeks back with the Democratic leadership team in the House, and their number that they'd like to see is $6 trillion in spending. And the way they parse that out is they're looking at 2 packages. One is a COVID relief bill where you're effectively passing another CARES Act. So unemployment insurance benefits, direct payments to individuals, aid to state and local governments, just to get us through until there's a vaccine. And then the second step is the traditional sort of Biden Build Back Better plan, which is a massive influx of cash into the infrastructure and jobs creation place. Democrats have always felt there's a very strong multiplier effect associated with infrastructure. And if you have restaurants and retail outlets functioning at 50% or less capacity, you can't just keep providing unemployment insurance benefits. You need to provide jobs. So it's a 2-pronged process. And the scale and magnitude of the problem, they think, is in the $4 to $6 trillion range. So if you were able to have a Democratic Senate that could provide you with even half that amount of spending, you'd be looking at somewhere in the range of $3 trillion in spending in 2021. And it can happen pretty quickly. We saw in 2009 that the Democratic Conference started working as soon as Obama was elected. They didn't wait until new members were sworn in. They started working in November, had a bill to the president by February, and it became law in the first quarter. They're looking to go big or go home, that's for sure. As we've heard from Speaker Pelosi directly, there is not a benefit in just getting something. You want to get the right scale and scope. I think a lot of that is a hangover from 2009 and feeling like the ARRA was not big enough. And so they faced pretty stagnant, slow growth in the economy in 2009, and they want to avoid repeating that.
Henrietta, can you look at the individuals that might lead the Democrats to flip the Senate and help me draw a distinction between how progressive the House is right now and how progressive the Senate might be in the new year?
I am so glad you asked. This is the critical question that I think investors don't have a firm handle on. The irony of this cycle is that the number of Democrats who are up, obviously only a third of the Senate is up for election in any given year. The members who would be sworn into the Democratic conference in the event of a blue wave type outcome, which is what the national polling data is currently pointing to, are going to be more moderate than they are progressive. So ironically, the larger the Democratic majority in the Senate becomes, the more moderate they move. And we have a whip that we provide to our clients to walk through exactly where those members are from. And let's just think about who they are. They're from purple and red states in Montana, Barbara Bollier in Kansas. She was a Republican in 2018. Now she'd be on the Democratic conference. No one up there is even remotely on the scale of an Elizabeth Warren or Bernie Sanders. You've got Cal Cunningham in North Carolina, Sarah Gideon in Maine, moderates basically as far as the eye can see, and 2 seats in Georgia. So I do think that one of the components that's most misunderstood is this idea that Democrats are going to come in and tax and spend. First of all, you don't have the votes for a tax increase in a global recession during a pandemic with nearly 8% unemployment. You've never seen a Democratic candidate come in modern history and increase taxes in a time of recession. So I walk our clients through that constantly, just trying to find out, where are the votes? I don't really care what members have to say on the campaign trail. Find me the votes. And the more moderate members will be the ones who deliver the Democrats' majority in 2021, if it comes to that.
So, Henrietta, I don't want to go too far. Obviously, the election is underway. Voting has started, but it's by no means over. But people are thinking about this. Would a potential Biden administration, would that government reflect the Senate more than the House in your mind?
I think that's always the case. Not only was Joe Biden a senator for 36 years, but his vice president is a senator. And the majority, even in the outcome of a blue wave, is going to be at most, I can wrap my head around 55 senators from the Democratic conference in the Senate. Whereas in Speaker Pelosi's House, you get 218, anything else is just gilding the lily. So we are anticipating that the votes that matter the most are the Senate votes. So when you're anticipating headline risk, I think that's much different than anticipating real outcomes from Washington, D.C. So yes, you'll get a bill from the House that incorporates things that are far more progressive, but you're not going to get a vote on that in a Senate where, Joe Manchin is there from West Virginia, Barbara Bollier is potentially in from Kansas. Those are all races that in some cases, members have to run again in 2022, like in the case of Arizona and Mark Kelly. So there's a lot of forward-looking 2020 anxiety already, and that's going to put a damper on Democrats' progressivity, if you want to call it that, in 2021.
Henrietta, before we let you go, I do want to talk about the polls. It's almost a double-digit lead now for former VP Joe Biden in the average of polls at the moment. Deutsche Bank pointing out that to flip that, it would be the biggest turn of events going all the way back to 1948 and Truman. I just wonder, when you look at the polls, Henrietta, right now, do they look vulnerable somewhere? And where is it?
They really don't. What I like about this election as an analyst and a forecaster is that the polls have just been so consistent. Indeed, if you go back to some of the notes we were writing in 2018, where we saw a similar 8.6% delta for the Democratic conference, that was a blue wave election. They won 41 seats. Then you saw the 2020 turnout in the primaries, and it suggested Democratic enthusiasm that exceeded even the 2008 election for Barack Obama. So now that we're in 2020 and we're seeing 19 million people have already voted, there's substantial turnout amongst females, which is very problematic for President Trump. That is a 17-point spread in favor of Biden amongst the female demographic. And then you have the seniors over 65. That's a 16-point spread for Biden over President Trump. And then surprisingly to me, you have a larger than 2018 and 2016 turnout amongst voters under the age of 29. That's also an area where Biden leads by, if I'm not mistaken, I think 26 points. So the people who are turning out are the ones who you would anticipate in a blue wave. That helps me get more constructive. But the sheer consistency of the data really points a picture where President Trump, who was able to swing voters in the last 3 weeks of 2016, not only is hamstrung by early voting in the coronavirus, and 19 million people have already voted, so he can't change their minds, obviously, but it's been so consistent, and there are not any events that we can see that will meaningfully change the narrative. I just go on to say one more thing, which is that turnout amongst the 40 to 64-year-old demographic, and particularly amongst males in rural areas, is down below even their 2018 and 2016 rates. So they could have an outsized showing on election day, but it appears as though they're actively staying home right now, which is, not what you really want if you're in the Republican conference.
Henrietta, always great to catch up with you, as always. A pleasure. For me especially. Henrietta Trey's there of Vader Partners. Coming up on this programme, presidential candidates focusing on the pandemic in dueling town halls with new cases spreading across the globe. That conversation coming up next with TPW's Jay Pawlowski. From London and New York, this is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I don't want to panic this country. I don't want to go out and say everybody's going to die.
We make up 4% of the world's population. We have 20% of the world's deaths. And what's he doing? Nothing. It is a presidential responsibility to lead, and he didn't do that.
Dueling town halls focusing on the president's response to the pandemic, with the United States reporting the most daily cases in 2 months. Infections spiking across Europe as well, with record numbers in Germany, France, Italy and Ireland, raising the risk of fresh restrictions. Outbreaks already prompting tougher curbs throughout Paris and London. On a story, Bloomberg's Katie Lyons joins us for more. Good morning, Kaylee.
Good morning, John. Well, let's start here in the U.S. where I am. Just here in New York, there's only 12 states that I can actually go to without quarantining for 2 weeks when I return. That is how fast cases are rising in many places in the U.S., and most importantly in the rural areas. The case count per 100,000 much higher in rural areas than in cities, and in the Midwest in particular, really starting to see a pickup now even in the most populous states in the region. Obviously, Wisconsin, very dramatic, but also picking up in Illinois, Michigan, and Ohio. And in those last 2 states, hospitalizations are actually up 30% in the past week. Hospitalizations also picking up of course, in Europe, John, as are death rates. And as you mentioned, cases at a record in places like Germany, France, Ireland, Spain, cases at the highest since back in April. You can see the dramatic increase on this chart we're showing at GTV Go, looking at the 7-day average for each country. Obviously, the most drastic increases in France and the UK. And the dilemma is, what can leaders really do to rein in those growing virus cases without going into a national lockdown yet again? There is little political appetite for that. Would be very damaging, of course, also to the economic recovery. What they're opting for instead is more targeted, localized restrictions. In France, Emmanuel Macron imposing curfews in certain places, including in Paris, and then in the UK, Boris Johnson putting in different levels of restrictions depending on the region. The question is, John, will people actually follow those rules? Are targeted lockdowns really enough to rein in the virus? And then, of course, are even targeted lockdowns still going to weigh on the recovery, John?
Will local politicians follow those rules? That's a big question here in the UK at the moment. Kayleigh, thank you. TPW's Jay Pawlowski seeing a direct connection between the rising case counts and the sell-off in European equities, writing the following. COVID control measures are dampening the reopening trade. The cyclical bias in European equities needs clarity on the vaccine front and perhaps US stimulus to move higher. Jay joins us now for more. Jay, it's been a really tough week for Europe as an economy and not just as a trade. Can you speak to what's happening at the moment? Because most people get frustrated by comparing case count now to case count back then. How do you navigate that issue?
Well, I think that's exactly right, John. The case counts are higher now in Europe, and as was pointed out, higher than in the U.S., which is quite a surprise and not what we expected or others expected, I think, a couple of months ago. But the important thing, I think, is that hospitalizations are down dramatically versus where they were in the first, let's say, the first spike in cases in Europe. Deaths are down significantly. And while we are talking about localized restrictions, which I think is appropriate, they're not shutting down activity completely. So if you look at mobility indicators, for example, they remain real-time mobility indicators in Europe and in the United States dramatically higher than they were in the spring. And look, I think we're getting closer from an investment perspective, John. Every day that passes, we're getting closer to getting clarity on a vaccine, clarity on stimulus, clarity in the U.S. on elections. So from an investor perspective, we were talking months. Now we're talking weeks, maybe even days before we get clarity on vaccines from Pfizer, expecting before the end of this month, vaccine by Moderna, expected by November. So we're in a effort, I believe the politicians in Europe are in an effort to kind of bridge where we are today with where we can get to, and localized lockdowns are much preferable to nationwide lockdowns. I don't think we're going to go back to that. I think we're in mitigation until we get a vaccine.
With that in mind, a recovery trade's the same as reopening trades, Jay. Are they the same thing?
Pretty much, John. I think, and look, we've seen indications of that. I call it a stealth rotation trade over the last couple of months, particularly in the United States, less so elsewhere. And as I pointed out, and as you read, Europe is a cyclical bias to its equity market. We all know that. So the question is, if we expect a boom in 2021, that's our view, a boom in economic activity globally in 2021. Who are going to be the primary beneficiaries? That's what we're investing for now. We're in the second part of October. We're 2-3 months away from 2021. We expect a lot of clarity on stimulus, on elections, on vaccine. We expect a 2021 boom. We expect the reopening trade to do very well. And remember, John, and I talked about it on your own show here a month or two ago, rising rates, a big pickup in economic activity is kryptonite for technology. So it makes perfect sense if you believe in a recovery that you want to be long non-U.S. equity versus U.S. equity, long cyclicals, long small caps, etc.
Well, Jay, you nailed it. You've got to have faith in the recovery. You've got to believe in the recovery. And right now in Europe, not many people are believers. We had sub 50 PMIs on a services PMI coming into the latest restrictions. Jay, people need convincing of this. And as far as other people are concerned, there's a better entry point. It might be 3 months down the road, but I'm not getting burnt going into Europe now. Why is now the right time to put on that trade?
Yeah, no, John, I think, again, you're exactly right. Look, we had a taste of it a week ago. We're only 1 week away, John, from the best week in equity markets in 3 months. That was 2 weeks ago. We had a taste of the rotation trade. And we bumped up, if you look, technicals are important in this kind of range trading market that we have across assets. And if you look, we bumped up against some pretty important levels in long-dated U.S. Treasuries. We almost broke through support. It bounced. XLF in the U.S. financials almost broke above 200-day resistance. We are above it. Yesterday's action, I thought, was very good. The financial ETF ended up above the 200-day moving average. So I think the question we need, what do we need to kind of see that conviction, John? We need clarity on stimulus. And stimulus we're going to get in the next couple of weeks, we're going to get clarity. We're 12 days, John, 12 trading days away from the election. Time is shrinking to make that decision. Once we get stimulus, once we get a vaccine, the action is going to move very quickly. And I think what we've seen in the last 2 weeks is that we are going to need that conviction, John. So I think you're right. To get money off the sidelines, we're going to need clarity on those couple of points. My point is that we're going to get that clarity on stimulus, on elections, on vaccine in the next several weeks, no longer months, next several weeks. So as an investor...
So Jay, I've got to jump in. You and I are going to have to catch up in the next several weeks and have that conversation then. Jay Pawlowski of TPW, thank you, sir. The opening bell just around the corner on Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Here are the morning calls. Wells Fargo upgrading Caterpillar to overweight. The analyst expecting earnings to improve next year due to accelerating global growth. Jefferies downgrading wind resorts to a hold. The analyst forecasting a more protracted rebound in Macau. And finally, JP Morgan downgrading Clorox to neutral. The analyst expecting sales growth and margins to peak this quarter. That stock down about 1%. Coming up on the program, gearing up for another big week of earnings. That conversation coming up next with Tollbacken's Michael Purvis on this Friday morning. Good morning. Equities advance.
when everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I just get the feeling that everyone wants this trading week over with. 18 days from the election, headline roulette down in DC over the fiscal package, the never-ending Brexit story boring you to death. Futures are positive. The data's better in America. That's got to be the story. An upside surprise on retail sales, up 0.5% on the S&P. Nasdaq futures outperforming. Switch up the board. In the bond market, yields up, treasuries down. The story after the retail sales print. We just about hold on to that, then fade. 0.73% is your yield on a 10-year. Euro advancing, tough week for Europe. Euro dollar, 117.35, and crude, $40 and about 40 cents. We're negative there, about 1.2%. That's the cross-asset picture. Let's get you some movers at the market desk. Here's Abigail.
John, let's start out with some healthcare movers, because we do have Pfizer having a positive update around their vaccine. This, as we do, of course, have the virus surging once again in Europe and some hot spots here in the U.S. as well. They are going to be submitting an emergency application in late November for their vaccine for COVID-19. That is, if a late-stage study proves safe for those who are enrolled. So that stock is popping higher. Also higher is AstraZeneca after they've received a deal with Switzerland to provide 5 million doses of their competing vaccine. That, of course, has to be approved as well. Boeing is up more than 4% after its 737 MAX has been deemed safe by Europe's top aviation agency. And then Fiat Chrysler up 2.3%, popping on Daimler's strong quarter. Speaking of earnings, let's take a look at some of the earnings movers here in the U.S. Hewlett Packard is higher, up 1.3%. They missed their fiscal fourth quarter estimates, but the outlook is strong, above estimates, so you see investors rewarding that stock. On the other hand, Intuitive Surgical down about 1% after they missed their third quarter estimates, and the outlook a little bit more cautious than the street would have liked. Apparently, pandemic headwinds remain. And then finally, J.B. Hunt, the trucking company, down 4.8%. They beat revenues, missed earnings, margins were squeezed. However, John, this stock was recently at a record high, helping to explain investors simply want more from a trucking company, a transportation company in a pandemic that recently hit a record high.
Abigail on the movers. Thank you, Abigail. About 2 minutes into the session, equities advance about 0.4%. Bottom of the pile, energy down about 0.9%. Top of the pile, materials, we advance there by 0.8%. Abigail mentioning the earnings, the financials behind us, ahead of us, big names from the tech sector reporting results next week. Running you through the big names, here's Bloomberg's Sarah Ponzek. Hey, Sarah.
Hey, John, much to look forward to next week and the week after. Of course, we can put a check mark next to those big banks, but next week is our second busiest week of earnings season. The following week is our busiest week, with many of those mega cap tech names coming to the fore, Netflix reporting next week. But to this point, the earnings season has really not been forgiving, at least when it comes to the market. We have seen a beat rate of 85% at this point in time. That is a very high beat rate, considering the long-term average is typically closer to 65% or so. Still, though, the average performance of a stock after reporting in the 24 hours following has been a decline of 1.6%, and we have seen the S&P fall. Now, as I mentioned, we will see those big tech names come to the fore. And you could say that some of these names are market darlings for a reason. Look at what you're looking at here. So technology stocks are not even supposed to see profits decline 2%. That is based on expectations. Still, you have 6 sectors that are expected to see a double-digit profit decline. Industrials expected to see a decline of more than 60%, as you see at the bottom of your screen right here. And this difference has really asserted itself in the stock market of 2020. The FANGMAT stocks, or you could call them FANGs with 2 A's plus Microsoft, whatever you do want to call them, up 50% in 2020. Meanwhile, the S&P is up closer to 8%. 1%. And if you strip out those 6 names from the S&P's performance, it's actually negative. That orange color right there is your FanMag stocks. Blue is the S&P minus those 6 names. And the fundamentals have matched this. In fact, over the last 12 months, FanMag stocks have actually seen sales increase. They have not been as affected by COVID-19. Some have even been said to be beneficiaries. Meanwhile, you strip those out and sales have declined for the remainder of the S&P, John.
Sarah, thank you. I do always sit here and wonder how people feel when they accidentally tune into financial news and hear things like FanMag stocks. But here we are. Sarah, thank you. I appreciate it. I think Lisa Abramowitz came up with that term about 18 months ago, and I just sat there laughing, and here we are talking about it seriously. On Big Tech, Tallbacken's Michael Purvis betting on tech to outperform, leading the S&P to 3650 by year's end, writing the following: Mega Cap Tech provides a quantity and quality of earnings you can't find anywhere in the world. Support will continue under a wide spectrum of economic conditions, making them even more appealing given the risk environment. Michael joins us now for more. Michael, a scarce asset. Can you walk me through that dynamic and why it's so important to get your hands around?
Well, yeah, as we look at tech stocks, we often think about the excitement of Tesla or Apple, cruising ever higher, and the retail involvement with those stocks we've seen over the summer. But if you step back for a second and think about, put yourself in a global asset allocator's chair, you're looking at, on one hand, extraordinarily low interest rates and generally very tepid inflation around the world. And on the other hand, a basket of companies that happen to be domiciled in the U.S. but are really global. And I'm referring really to the mega cap tech stocks, the Apples and the Microsofts and Amazons, so forth. And they're really global companies. Maybe half of their top line comes from the U.S., half overseas. But you can't find that asset class really in any other market, certainly not in any significant scale and liquidity. So, it's important, I think, to sort of zoom out and just consider that this asset class is especially relevant to an asset allocator. We look at it we look at tech as a sector. I almost think the big cap tech is almost breaking away into its own asset class in a way, because it has some really unique features. And those unique features are also, by the way, driving this sort of what I call digital polarization that the Fed has to contend with, that value investors have to contend with as well. So, clearly there's periods of overextension like we had in September. But I think they're going to lead the path higher and help bring the S&P 500 to 3650 at the end of the year.
Well, Michael, I don't mean to be snarky. Typically, when we talk about a scarce asset and we talk about a defensive asset, we usually think it's a low beta asset, particularly in the equity market. Defensives, low beta. And I just look at tech and I wonder, how can you be low beta when you are the market? And that's what tech is right now. It basically is the market, Michael.
Well, yes, that's right. If you look at the beta, for example, of the NDX to the SPX, back in the 90s, it was a very different number, much higher number, right? And what's happened is that it's become this sort of, as you said, I described it as the techification of the S&P 500, which has changed the overall margin complexion, the overall return on asset complexion for the broader market, simply because the weighting is so much higher there. So you're absolutely right. It is becoming, part of the really defining, the broader, do you want to own the S&P 500, yes or no, question. And again, you can't find that dimension in European equities or Japanese equities or most emerging market equity baskets there. So you're absolutely right. It's becoming that. But I would also say, John, that if you look at the earnings of big cap tech, the quality of it's not just the quantity of those earnings, and I'm not talking about expectations, just go back for the last 5 years. You look at the quantity of those earnings, and then you look at the volatility of those historic earnings streams. And that ratio, I call it a Sharpe ratio for earnings, simply the growth divided by the standard deviation of those earnings. It is vastly superior to what you'll find in other sectors and other equity markets, and certainly values. Yeah. So there's beta in the market, but there's also this concept that the earnings are extraordinarily stable and also within big cap tech and very insensitive to so much political situations, geopolitical situations, yield curves expanding, yield curves contracting, pick your scenario, they kind of grind their way through it because of the uniqueness of their business models.
Michael, stick with us. I just want to get to the market action at the moment. The S&P 500 up 1/3 of 1%. The Nasdaq up around about 0.5%. We're looking ahead to some of the tech earnings. Got to look to a recent rally in the transports as well, facing a big test next week as the sector gears up to report results. On that story, Bloomberg's Scarlett Fu joins us now. Hey, Scarlett.
Hi, John. Yeah, what a rally it's been. In the wake of the pandemic, both tech and transportation stocks were big winners, and the narrative was really clear. The disruption led to surging demand for hardware, software, the cloud, while a network of companies needed to deliver our new PCs and other purchases to our front door. So after a blistering summer rally in which everything seemed to gravitate to new highs, tech stumbled in September, but notably, transports did not. The Dow Transports move relative to its 200-day moving average, that's the blue line, has continued to widen and has now caught up to the tech premium. The white line is the NDX's relative strength to its long-term trend line. The Dow Transports average yesterday closed at a new high. That's its 5th in 6 days. And it's now up around 80% off its lows. And it's been led by delivery companies, FedEx and UPS, which are among its most influential members and, of course, some of its best performers as well. This is despite a significant drag from the airlines, which is the Dow Transport's smallest weighted members. Trucking is also seen as fairly well placed because increased demand plus a shortage of drivers equals higher rates. But according to Susquehanna, these fundamentals are a known, which may explain the reaction to J.B. Hunt's earnings this morning. Expectations got ahead of themselves, and we saw the average third quarter earnings estimate increase by 5 cents in the 4 weeks leading up to the results. J.B. Hunt's stock jumped 13% in October. Now, rail companies will give us a read next week when CSX reports, and according to Bloomberg Intelligence, falling demand for commodities like coal, like crude oil, is hurting volumes, but a pickup in manufacturing will lead to restocking, and that may make up for it. John?
Scarlett, thank you. Let's continue this conversation just briefly with Michael Purvis. A final question from me. Michael, we caught up with Jay Pawlowski of TPW and said that higher rates would be like kryptonite for big tech. When you compare the new economy, the tech players that you've described, the old economy, the old stocks that we've been used to for years, decades, that Scarlett's talking about right now, how do higher rates and higher yields fit into those two trades?
Well, I think there's the notion that classically that as interest rates go higher, that you're supposed to sell tech and buy value, with the notion that longer dated assets are going to be more sensitive to a higher discount rate. For me, that logic is too textbooky, if you will. What I think happens classically over the last several years is that rates higher reflect a growing economy, and there's going to be rotation into value and cyclical stocks away from the big cap tech names. I think that's really kind of what it's more about, the unexpected improvement in the economic condition that's going to help lift those value stocks or cyclical stocks higher there. But I think you have to be very measured with expecting how high a increase in rates, or for the matter, how sustained a value rotation is going to be. There are certain sectors and stocks that are very much sort of exempt from this concept, if you will. But I think generally, the value rotations tend to happen when tech gets sort of overextended and investors need to place some money there. The irony, I think, is that value investors are typically buy and hold investors, but increasingly they have to learn how to be traders, and momentum or growth names are ones you just kind of want to sit back and hold. There's sort of a switch off in sort of investment tactics, if you will, that you need to consider there. So I don't buy the whole rates are going to go up to 2.5% and because of Democratic sweep and you have to own cyclical names and sell your Apple and Microsoft.
Michael, point well made, sir. Great to catch up with you as always. Looking forward to catching up ahead of the election as well. Michael Purvis there of Toolback. And coming up on this program, US retail sales rising at the fastest pace in 3 months. That conversation coming up next with UBS's Michael Clockerty, and we'll touch base with Michael McKee. And quite a week for mixed data worldwide, not just in America. That's next on Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
15 minutes into the session, equities advancing 0.4% on the S&P. Your outperformance on the Nasdaq up by 0.6%. Regionally, your outperformance coming from Europe. The DAX bouncing back after a rough day yesterday, up a little more than 1%, up by about 1.1% this morning. Elsewhere in America, retail sales rising at the fastest pace since June, despite accelerating virus infections threatening the economic rebound. Morgan Stanley's Chet and I maintaining a V-shaped recovery is still intact.
The equation between virus and the economy is changing. So as we keep seeing this new cases rising again, we have to temper down the expectation of its impact on the economy, but it will still continue to make progress towards that V-shaped recovery call that we had made, which is that we will see that U.S. economy will reach pre-COVID levels by second quarter of 2021. The V-shaped recovery path looks very much secure.
Michael McKee joins us now. Mike, it's not been obvious. Retail sales were good today. Claims were a little bit more concerning yesterday, and some data about 30 minutes ago disappointed too. Can you put it all together for us, Mike?
Well, basically, John, we've had a good news, bad news day that leaves us no better off in terms of knowing where we're going in terms of the economy, even where we are in terms of the economy. You're right about retail sales up 1.9% for the headline. That's compared with a 0.6 rise the month before in August. And the control group, which is the part that goes into GDP that everybody really cares about, it was up 1.4%. It had contracted 0.3% in August. So much better news, led by the fact that Americans spent a ton of money, 11% gain on clothes. Back to school, I guess, worked this year. The level of retail sales now 7.1% higher than it was last year. So retail sales, at least in terms of dollars, has recovered. Clothing store sales still down 12%, though. Industrial production, the other number you mentioned, down 0.6 on the month. Now, air conditioners switched off, so utilities were down significantly. But the bad news was manufacturing was down 0.3%. It was up 1% in August. And manufacturing was the part of the economy that was supposed to be good. Now, you can see there the Atlanta Fed GDP numbers, the forecast for what it would be if GDP were just based on the numbers we have so far today. And they say 35.2% rebound in the second quarter. Now, that's on an annualized basis. If you figure out what that means on a quarter-over-quarter basis, the first quarter was up, the first quarter was down a little bit, and the second quarter was down a lot in the U.S. by about 32%. And so a 35% rise would bring us just ahead of where we were in quarter one in terms of GDP. However, what we end up with is a GDP number that is still 5.6% below what it otherwise would have been by the second quarter when Chet and I says we're going to catch up, because if you assume that the economy is growing 2.4%, last year's average, that's where we would have been, up at about 20 trillion, 189 million. And so we've got a long way to go to catch up. We may have something of a V. You can see there, the red circle is where we anticipate what the forecast is if you use the GDP now number, and the blue line is what we would have been if not for COVID. So we're still going to be very short in terms of getting the economy back to where it otherwise would have been.
A billion, a trillion, it's hard to keep up these days. Mike, great work as always, sir. Michael McKee there on the economy. This bond market sold off after retail sales, then the bid came back in. A 10-year yield down by about a basis point on a session now, 0.72%. On rates on the Treasury market, Michael Clougherty joins us now, UBS head of US rate strategy. Michael, it's really interesting, this rates market in Treasuries, that we've thrown everything at this. We've had a conversation about $2-3 trillion of fiscal stimulus, and here we are still in and around 70 basis points. Why, Michael?
So I think in the short term, we're going to get a little counter trends moving here. So we've all been very worried about all this supply. What we think we're going to get in the November funding announcement is a slowdown in the rate of increase in auctions. So the current pace of auction increases just raises an extraordinary amount of money. So if you stick with the current pace for one quarter, stay at that level for the following year, you raise an extra $576 billion of cash from the increase in auction sizes. So that you can't stay at that pace for very long. You start to raise too much money. We think they're going to slow down at the upcoming November refunding meeting, and it'll mean they're going from 150 miles an hour to 120 miles an hour. It's still a scary pace, but it's going to feel a lot slower for a while, and we think this will put some stress on some of the supply-driven trades out there.
Michael, just on the Treasury market, I think it's worth pursuing this a little bit further. Morgan Stanley CFO was on the program yesterday speaking to our colleagues, and he said that a Biden blue wave was priced in. Do you think that has been priced into the Treasury market then?
I don't think it's been fully priced in. I think, clearly the backup in yields we've seen recently reflecting some of that. But I don't think we're pricing. I think we're pricing in Biden, but I don't think we're pricing in a full Democratic sweep yet.
What do you think the downside is on rates if we wake up November 4th with a divided government?
With divided government, I think, I do think we're going to see 10s rally, close to 10 basis points off of that.
Well, what was that, Michael? 10-20?
It'll rally about 10 basis points, which, again, doesn't seem like a lot, but you're at such low levels that to get you lower takes a lot of lift.
Well, this is the big question at the moment for people putting together portfolios. Where do they get that safety from? And to your point, 10 basis points is a lot if you're at 70. Do you question the risk mitigating characteristics of treasuries? Are you in that camp, Michael? What do you say to clients when that conversation comes up? Because I imagine it will.
Yes. Particularly in 5 years and shorter, there's just very little upside in those maturities. So you're just not getting a hedging benefit from that. Forcing people to drift out the curve and actually take more interest rate risk in order to get any hedging benefits from there, even out in 10-year space, not a tremendous amount. So it's forcing people to go out to the bond, which, again, you're taking a lot of risk to cover yourself there.
Michael, enjoy catching up with you, sir. Come back soon, won't you? Michael Clougherty there of UBS on this rates market. Equities are higher with a sector price action. Back with us. Here's Abigail.
John, interestingly, with the S&P 500's modest gain right now, there's a slightly more risk-on tone, but it's not very themey. It's more idiosyncratic to the names beneath it. The top sector is healthcare, being helped out by Pfizer and hope around the vaccine. The industrials being helped out by Boeing and the fact that the 737 MAX has been deemed safe by a European aviation agency. That we have some of the stay-at-home discretionary and staples. On bottom, energy, that is in line with oil being down. Now, on the month, this is interesting because the top sector in the month of October so far, utilities, this even as yields are higher, typically the utilities would be hurt by yields going higher because those dividends don't look as attractive. And then some of the discretionary and tech. So October right now shaping up as defense growth and the industrial cyclical tilt, John.
Abigail, thank you. Coming up, the market-moving events you need to be watching. That'll be next in our trading diary. This is Bloomberg.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is it time to redistribute the wealth? Two perspectives.
Pointing to billionaires and saying we should take their money away is ineffective political strategy.
We have a choice in this country, either great wealth in the hands of a few or a democracy.
I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday at 7 p.m.
The second half will be a lot stronger than the first half in China. We're heading to what we call the golden season of auto sales.
We are very confident, we're going to have another big growth, 2021 versus 2020.
We did not see people kind of holding back.
Chinese customers are into, right now, buying individual mobility.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Here's the trading diary over the next week. Joe Biden discussing healthcare in Michigan at 2:30 Eastern. President Trump holding a rally in Georgia at 7. Then Netflix reporting results next Tuesday after the close. Tesla reporting on Wednesday. Plus we get the Fed's beige book. And finally, initial jobless claims on Thursday, followed by the next and final presidential debate from Nashville, Tennessee. From London and New York, this was the countdown to the open. For our audience worldwide, catch me on Twitter at Fero TV. This is Bloomberg.
When everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest-hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off. These guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansati.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansati.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
Her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry city?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
that moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law, with its swagger and ill-fitting suits, caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for fifth generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
People think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends. But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia a regional power. Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
even though Putin denies any wrongdoing,
U.S. election.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to us say, 24 people went for the job. 73 people accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word, beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统基础，这方面确实比你早。但是玩信息玩软的，中国的脑袋绝不比你们差。我们在座的所有的人的脑袋绝不比你们差。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it served him well.
Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different...
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, ValueAg, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Largely, the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch. Some people come with an Adobe Illustrator file. And we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is open, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it, and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. we bring it over to the aging table, where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
bit like an addiction. You've got to make something. You have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. It's Spend cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice. You've got to be able to judge material temperatures. You've got to just look at it and you just get a feel for it. It's a stage where your tubes start to look a bit like a bicycle. My father's a jeweler. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something. It just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched. You have symmetry in the colors and texture of the wood. Cut your outline. take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table, once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of